Hey, what are stocks moving in the pre-market this morning? So we'll be able to discuss lots of things. I'm not expecting too much movement ahead of Fed and FOMC. We've got a bunch of different events layered throughout. We also got the Bank of Canada interest rate decision and press conference before the actual Fed meeting. So that we have seen in the past that meeting can be a little bit of this tape bomb event. But you do have some earnings today and this, or after hours and this morning that we can discuss. Some stocks are really starting to move. Let's just quickly go through our commodities. So gold, we're on it right now, having a nice little recovery and bounce. Basically, it's triggered a little bit of an hourly inverted head and shoulders. This little near-term bullish pattern takes you to about, let's just say, the 41.20. That could actually hit today with the Fed comes out really dovish and they announce that they're kind of um, stopping the QT, and maybe if they announce some QE, this could at least fly back to 4,200. There is some resistance on gold, which is going to be on the 4-hour chart here. You can see the 4-hour chart of gold is basically coming into that neckline. That's a big area that gold needs to get back above. What I think is going to happen is you're probably going to do a little bit of a push through that area, a pullback to say pre-market low. That would create this little bit of a right shoulder formation, and then it gives you a higher upside target to kind of trend towards. So that's what I just think is probably going to transpire. But we will obviously wait and see. I want to see gold. I want to see GLD back into that 371 area. We obviously still have some calls on it that were getting pretty crushed yesterday, but making a nice recovery today. So I think GLD has a chance. If I flip back to the regular session, I think GLD has a chance to push up to its prior day high. Maybe call it 374 today. And then eventually it'll work itself probably higher. Okay, let's look at silver real quick. Silver, phenomenal bounce, daily chart. Take a look at that. Like I said, you got that bearish cross on the 7 and 20. Usually you get a bounce into it. The real test is for the bulls to get back above that 7 and 20 moving average. All right, let's look at uranium. Uranium's still a freight train, bouncing pretty sharply and hard. Again, still an asset that is catching a lot of political bids from renewable contracts. Let's look at crude oil. WTI crude, that is trying to hold its 7 and 20 crossover. Again, guys, look at how you got that bullish cross on the 7 and 20. Then they sold into it. This is what I think Bitcoin is also likely going to do. You can actually see Bitcoin did get that 7 and 20 sell as well yesterday. Hard reversal into it, getting bought up. So crude oil is actually into a bit of a long area here. The only concern with crude is that you do have inventories today at 10:30. So that is another market moving kind of event. I think that WTI crude is going to bounce back up to this 62 area. So there might be a little bit of a lotto trade on some energy stocks, but crude oil I don't mind as a long. I would love to see inventories wick it down into this gap. If it were to wick it down into this gap, I would consider a little bit of a day trade long position off the inventory report. Okay, so we'll keep that on watch. Crude oil. All right, let's see what else we can bring up. Natural gas. Natural gas right now down another 1%, continuing to trickle down. Really, its next support lies at this previous gap fill. Retest of this volume surge and gap up. But again, I don't really like the fundamental inventory reports over the last couple weeks for nat gas. I still think that this gap up on that weather report is probably going to be sold into until it's filled, if not even lower. So we obviously closed our nat gas short yesterday. Obviously, it's up a little bit even more today, but you know, nat gas is just a wild asset. When when you have profits in the trade, you just want to take them, or at least pare some back. So I decided to close at KOLD. It was a fairly decent size position, so netting a nice little 8% gain. I'll take that every day of the week. All right, let's quickly look at Bitcoin here. So BTC does look poised and ready for its next leg higher. Obviously, it's FOMC, big volatility could be coming into play. So there's always a risk buying, but technically speaking, you've had that 7 and 20 crossover. You've back tested it. You're holding in the near term. BTC is looking pretty decent here for a long entry. Again, tight stop loss. Kind of the stop loss on the trade, I think, would be this breakout candle bar. You know, if you got a daily close below this 111.13, that's kind of what would stop me out of the trade. Let's look at Ethereum real quick, and then we'll go through some of the individual stocks moving. So ETH trading and holding 4K. Chart pattern is a little bit more mixed than Bitcoin. I prefer Bitcoin's chart pattern right now. But there's this very weird inverted head and shoulders potentially building. Your neckline would kind of be this area, and this, if this explodes and breaks out of this downsloping little neckline, I mean, you got new all-time highs in ETH. You know, call it 51, 5200. So maybe that can happen off of a really dovish Fed. Maybe the Fed announces QE again. Who the heck knows, right? Maybe that's why stocks have been running so much. Maybe the Fed is going to be announcing some QE today. Or maybe not the start of QE, but maybe he mentions QE, and for maybe a couple months down the road. Stocks are always forward looking, so we will certainly find out. All right, we also took, this is a live trading trade yesterday, live room. I closed my NOK short, guys, in the pre-market, netting just about 6.7% gain. I closed at 750, 751, so it is a little bit lower, but I did take my full profits off of this trade. So this was a nice little one we telegraphed yesterday. If you shorted with us, congratulations, another little win. All right, let's go through some of the movers, some earnings candidates. So you got Kitty Cat, Caterpillar. Caterpillar's been such a strong stock. Gapping up yet again on earnings. Caterpillar, I'll post the earnings here in the chat here, but Caterpillar, pretty decent earnings. It's a double beat across the board. Revenue 17.64 bill. EPS $4.95. So it's a 9.5% beat on EPS. Pretty decent move for Caterpillar in the pre-market. Again, the question is, will this be a sell the news event? You know, earnings, there's a strong chance of that, but it's going to be tough to take this one down. I think it's going to probably stay pretty firm until Fed. All right, let's see what else you've got. We got ticker BE, Bloom Energy, absolutely ripping. She's ripping, closing at 113, breaking out to new all-time highs on ticker BE. Stunning move to the upside, up 14.5% on its earnings report. Let me pull up that BE report here. Where are you, BE? Come on, where are you? Must have passed it. I know, we'll just look at the trading views. But double beat both the top and bottom line, reporting 15 cents EPS. So definitely a strong stock that likely can squeeze, but look how extended you are yet again from that 7 weekly MA. You know, naturally you would expect this to come in a little bit. This one's probably a little bit of a top short watch today. I wouldn't mind scalping it on the short side today, guys. The only concern I would have is, let me just calculate this little target breakout target here. So I mean, in the grand scheme, if they really wanted to push this thing, you're looking at 144-ish. Let me just take a peek at something else. So we dipped into the 20. The last time we dipped into the 20 was over here. Let's just do a symmetrical move from this low to this high. So yeah, you've had a pretty decent run already. So that's that pullback. Now let me take a look at this. It matches up. Wow, they could even push it to 150 if they really wanted to. Interesting. But I don't mind this one on the short side today. A little bit of a scalp short. Let me just see where it is in the pre-market. Yeah, you can see it's off of its highs already. Let's just mark that in. Yeah, if this one were to retest a little bit higher, guys, I wouldn't mind shorting it. Ticker BE. There will be a little bit of a fade opportunity, and we've traded this one before off of a day trade, so that's not a bad area. Good morning, Dom. Dom's rise and shine with gold perking up, eh? Easy to get up in the mornings when gold's up 1.67, eh? There you go, Dom. Just for you. Nice bounce on gold, triggered an inverted head and shoulders, target 4120. Near-term resistance is on your 4-hour chart, EMA 113, previous little neckline. I expect a push, a small pullback, and then a continuation. NGD had an amazing quarter. Let's look at NGD. So you're all over your miners. Yeah, gapping up quite nicely there. Quite nicely. All right, let's keep going through here. We got TEL, TE Connectivity, also reporting earnings. Strong gap up on the session for TE. Absolute ripper. You got Boeing reporting earnings, guys. Boeing seeing a little bit of sell side pressure in the pre-market. The stock was up and then it was down. So you can see it's wicking around. I still like Boeing, to be honest. I still think the stock is easily going to push up to this next resistance area, which puts it into that 230, 231 zone. And then if you look at the weekly chart of Boeing, guys, this is a very, very, very decent bull flag building right along that 365 week moving average. So that's a big MA that has kept us in check really for quite a long time. I mean, you can take it going back to 2021, but this is looking like a nice weekly chart bull flag on Boeing. I'm looking at building into some more positions, even for the 2020, late 2026, 2027. But Boeing, again, earnings to me, sure it matters, but in reality, they just have so much backlog and business that they still have that monopoly of kind of that airplane market. All right, let's look at ticker VZ, Verizon, also reporting earnings. Stock is gapping up on the session. It's a miss on the revenue, 33.82 billion. Beat on the EPS. Okay. Let's look at CVS. CVS also reported earnings. It's probably pushing here. Yeah, it's pushing to the upside. Gapping up yet again into new 52-week highs. Not all-time highs, but new 52-week highs for CVS. Revenue coming in at 102.87 billion, 4.31% beat, and then EPS big beat, 17.65% beat. This is an interesting stock, guys. FI. Bloodbath. What a bloodbath, eh? Craziness. We can remove all this. Wow. Remember, we traded this one on this gap down as well. And look at the bounce that we can potentially get on FI. This is a huge gap down. I mean, that was a 10% intraday bounce that we're looking to trade again today, but this is just getting absolutely smoked. I mean, closing at 126. So revenue on, it's a double miss on the earnings front. I will post that in the free Telegram group, guys. So definitely check out those earnings there. But just nasty. Huge earnings. That's crazy. Well, let's just see. So basically, FI is coming into this. This is your COVID low here. Wow. That's crazy. And I'm sure it probably pierced that in the pre-market already. Let's just take a peek. Wow, no, it hasn't, but it's getting down there, guys. Holy moly, it's getting down there for sure. That's interesting. Very cool. So FI, I'd love to see it sweep that little bit of a low. That's definitely on watch, guys. I'm going to put an alert there. I just want to make sure I isolate the level to a T. So it's still a few dollars away, but that would be nice to basically come into that level. And then you have a secondary support zone down here, major pivots. Wow. What a bloodbath, eh? What a bloodbath in the market for this stock. Holy smokes. It's down over 40%, guys. Ooh. Ooh. That's nasty. Double miss down 40%. Revenue miss by 1.68%. EPS miss by 22.73%. That is filthy. All right. We got to go to some monthly time frames. This is a huge extension move now, down. Look at that, guys. We are coming into the monthly 200 MA. That is sitting at 71.17. The monthly 200 MA. That is crazy. Yikes. What a drop, guys. What a drop. And the problem with this stock is, should it have been trading up here? Likely not. I mean, look at that blow off move. You're basically just eradicating that whole bubble. This chart is now going to be cooked for like a long time. You know what this is kind of going to remind me of is like PayPal. You know, this chart is probably had that blow off move and then it's going to go through this multi-year probably basing formation, but Pfizer is cooked. Yo, that's cooked. That is just filthy. Wow, you've just obliterated every key fib level here that you can find. That's insane. It's truly insane. But there's a ton of volume sitting right back in here, guys. There's a lot of volume. Your COVID low, then your massive 2019 breakout bar. So that's an interesting one, guys. I would look to trade it in this vicinity down here. It needs to get below 73.53 for me to consider it. Ideally, kind of into this 71 kind of 30 area, that monthly 200. That's where I like it. Right in between these two massive volume zones. But there should be a bounce trade on that. Should be a decent sized bounce. All right, sorry, that's too much time on that stock. That just gets me excited when there's a huge move like that in a big company. All right, let's keep going through. So R&R also seeing some strength. Let's look at whoops, why is that coming up? Let's look at ADP also reporting earnings double beat on the rev. And the EPS stock right now is also gapping down. Go figure. So revenue coming in at 5.18 billion, EPS 2.49. Stock is still under pressure in the pre-market. You are coming into a little bit of a support area here. Previous pivot highs in 2022. Let's look at this monthly chart. No real monthly moving averages. That's a bit of a concern. Undercutting that MA. Interesting. Very cool. Morning, Peter. So I mean, this ADP could probably still come down to call it 267. I want to let this one fall. Even 267's, I mean, not really the strongest level. I prefer it off of this trend line, call it 262, 263, but that one's also on watch in the event that it keeps selling into this kind of this pierce of this Fibonacci level, this parallel channel upsloping trend line. I'd keep that on watch. All right, let's see what else we got. FTV, Fortive is ripping to the high side also on earnings. So that's a strong gap up and move. Really, this one's probably going to try to push for this previous gap fill pivot high. So call it 56. I think that this one has quite a bit of support below it. So what I would ideally like to see is a pullback into that daily 200 moving average. And I think you can get a continuation long. All right, let me see. Baba's seeing some strength as well. Not much. Right now you have Nvidia absolutely pressing in the pre-market, guys, up 3.5%. What a blow-off move on Nvidia. I'm glad I didn't short it. I think the company is now hitting 5 trillion with today's gap up. I'd have to do the math. I'll let TradingView do it when we open. But Nvidia, I think, becomes a little bit of a short today, intraday. I mean, what a move on Nvidia. Absolutely incredible. Gapping up, another 3.5%. That is just filthy. Crazy. All right. Lifting the market, putting it on its back. You got strength in Amazon. That's up 1.35%. You've got Microsoft slightly green up 0.47. You got Apple's basically flat in the pre-market. Google right now is flat in the pre-market to negative. Meta is also flat in the pre-market. So kind of your stocks that are reporting earnings today after hours, Microsoft, Google, Meta, they're all flat. Tesla right now still showing a little bit of strength in the pre-market, up about $4 on the session. Let me look at some of our top losers here. Oof, what the heck is this? LRN also getting smoked, guys, on its I think it's earnings. Yeah, down over 40%. Wow. What a drop. LRN, Stride Inc. getting smoked. I mean, wow, there's a little bit of support, breakout backtest, but even still, that's a nasty drop there. Look at that plummet. There might be a little bit of a scalp long here at this 83.35 zone, but that's a big gap. That's a big, big gap. I don't like that. But what a drop. Jeez. Garmin's also getting a bit of a hit here. GRMN coming under pressure here in the pre-market. You got Clean Harbors, ticker CLH, also coming under some pressure off of its earnings, gapping down on the session. You got Generac, GNRC, gapping down on the session. This chart was looking pretty constructive and strong, and now it's just failing. So I do think that there's probably a bid off of this. I would consider it off of this daily chart EMA for a bit of a bounce. You know, that's not a bad area. Let it fall and backtest this kind of breakout zone. So I wouldn't mind it off of that zone. I'd consider a scalp long on Generac, but also falling on earnings. What else do we have here? SLGN, that's also falling on its earnings report. ServiceNow under a little bit of pressure. Ticker ETAT under a little bit of pressure. Let's look at this Hayward, ticker HAYW. That stock's gapping up to the high side. Another breakout. This is a stunning daily chart breakout. If it can hold, I mean, you got a very congruent inverted head and shoulders, and it's large. I mean, 11 to about 16. That's a just over $5 inverted head and shoulders. That's pretty big. Ticker Teradyne also showing some strength in the pre-market. TER on its earnings report, gapping up to new all-time highs, clearing this massive resistance pivot. This one probably is a little bit of a short scalp opportunity, and then it switches to another continuation long. Very strong chart as well. Teradyne, ticker FTV. We look at that. Fortive gapping up. That one's a backtest and rebuy. CNC. That one's also having a strong gap up today. Damn. CNC up several percent here from 33 to 35, gapping up. I was still hoping for a little bit of a lower back test on that name, but you don't get everything you wish for. AVTR, Aventor, that's coming in sharply off of its earnings. Nasty little drop. ENPH, that's also coming in from its earnings. Again, ENPH just struggling down here. Another stock that's probably going to put in a multi-year basing formation. It is breaking out of that wedge pattern, but you can see the breakout is pretty muted. Anonymous saying going all in on Nvidia puts today. Maybe. It's certainly looking juicy. I'm glad I stayed away from it yesterday. There's a lot of people that decided to pile in on the short side yesterday, and then they gap up. You know, when you gap up the world's largest company another 3.74%, that is just mind-blowing. It had a 5% day yesterday. Now another 3.7. We're not talking about no Mickey Mouse money here. We've got some crazy, crazy money pumping this stock to the high side, guys. You know, we're talking hundreds of billions and trillions just flowing. Flowing. All right, Caesar, ticker CZR. This is actually one on the scalp side. I believe I looked at this one yesterday, scalp long, gapping down. Yeah, this one's gapping down to new 52-week lows. I do not mind that for a bit of a scalp long. I just want to look at something real quick. Again, make sure that you keep in mind that it is Fed day, guys. So the real volatility on the indices, I'm not looking to trade the indices this morning. I'm looking at trading individual names. There's certainly a lot of stocks moving that we don't even need to really trade the main indices to make money. All right, so we have a big gap fill. So breakout, back test, higher low. Breakout, failed to higher low. Higher high, back test. Yeah, so that's a decent sized area. A lot of action in here before we broke out. So what are we, 20 bucks now on the chart? So I get interested around that $19 area. What is this type of a range here? Yeah, it's a 10% range. That's pretty big. But I don't mind it here. I mean, you got that nice volume surge, attempt at breaking out, failed, backtest, bought up. So I don't mind the $19 area on ticker Caesar, CZR, Caesar Entertainment. Again, this is a this is an earnings trade. So, but it usually gets a bit of a bounce. Usually. You had a nice breakdown today. You're going to put in that negative divergence. Yeah, it's looking pretty interesting. I'd let it fall a little bit more, but if we got down to this $19 area, I would consider a scalp long on Caesar, ticker CZR. See what else we got going on here, guys. NASDAQ, unusual volume. Trades. So FI, guys, is really a top watch. You know, the volume is going to be thick and heavy today with this gap down. I mean, that's filthy, man. That is just crazy. Exiting stage left. Wow. Wow. But that's a top scalp idea, guys. I think we can at least get a 4% bounce with this type of a move. If not, maybe 8 to 10%, just with how our markets move. Wow, Fubo. Wow, Fubo ripping right now. Holy moly, look at Fubo. Did they just announce some news? They must have. Either a pre-earnings guide or some news, a partnership. Let me just find out here, guys. But that stock just moved. Fubo stock surges after closing merger with Disney and Hulu. Wow. Strong partnership. How's Disney doing? Disney's actually under a little bit of pressure, but what a monster gap up on Fubo today. Gapping up to 440. This has got some serious legs to run, guys. Pure, short squeeze speculation and momentum. Small cap. It's a lower priced equity, so you have that retail behind it, as well as maybe some of the smaller fund managers, but I think Fubo can actually run back to the pre-market high, and I think it could even test $5 today. That's a huge, huge surge in the pre-market, and it's decent news. Really decent news. Catalyst. Germ is saying, what you think about APP? So AppLovin has really been chopping around since they got that SEC news. You're still just trading inside of that initial high volume SEC kind of probing candle. That being said, it's been grinding and working itself higher. You've recaptured the 20-day, so this chart is technically bullish. You're about to get a 7 and 20 crossover, I would say maybe 1 to 2 weeks out, just depending how long this pattern can take to consolidate. But usually right ahead of that 7 and 20, you get a dip into that 7 moving average. That would be your buy zone. I wouldn't chase it up here. I'd wait for that dip back into the 7. That would be kind of your area to get long. Hopefully it would fill, I mean, it's not likely going to fill this gap. Maybe it does, but a dip into 7, you get long. If you start losing that 7-day on a closing basis, then you're out of the trade. But you're probably going to get a dip into that 7-day moving average once that 7 and 20 starts to cross over a little bit, sooner. NU, you want to look at NU? Yeah, so NU's another one, guys, that had that 7 and 20 crossover. I'm expecting still another, at least a dip into the 7 before it's ready to get going. Okay? But chart pattern's not looking too bad. You've got a lot of momentum on both the weekly and daily chart. I would say it needs a little bit of consolidation, but these markets really don't like to consolidate much. They just boom, keep going. So the chart pattern is looking pretty decent, but I would wait for a back test of the 7 to get long that name if you're looking at it. All right, what are we? 5 minutes till the open. Holy moly, I gotta get some more coffee, guys. This market just is incredible. I'm gonna keep Nvidia. I'm not even gonna look at. I'll watch the indices, of course, on my other screen, but I'm gonna keep Nvidia on watch. This is a top short idea. I am looking at fading this behemoth today. Um, Again, I think what's probably gonna happen is you're gonna get a lot of short covering off the open that squeezes it back to pre-market high, and then we'd look to fade. Okay. And then FI, that is definitely one I'm looking at on the long side. I like this gap down on FI. I mean, wow, just a bloodbath. What was the market cap going into this? So FI was trading a market cap of 68.59 billion and you're losing 40 to 50% of that. That is filthy. That is just downright dirty. Look at them still sell this, guys. We're sub 73 now. You violated the COVID low pivot here. That is just cray, 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 cray. Look at them sell this name. That is just downright dirty. Oh my goodness. And again, if you didn't hear, guys, earlier in the stream, I even sent out an alert to the live trading group. I closed my NOK short from yesterday. I closed at about $7.50. So netting a nice gain on that. That day trade from yesterday, I closed that, covered the short in the regular trading session, just as a heads up. All right, let me grab some more. Yeah, the stock is over. It's going to be a PayPal 2.0. Definitely over for it for now, but we can trade a bounce. All right, let me grab some more coffee for the open and we will get situated here. Holy moly, guys. Pfizer is coming into that monthly chart support area. Tagging the monthly MA right now. Monthly 200 moving average. Look at that. They're trying to bounce it just a touch off of that monthly 200. We're through it. We are through it. Yikes. That is filthy. Oh my gosh, that is filthy. All right, we got 1 minute till the open here. I'm probably just going to go in with common shares in the event that the options have too much volatility priced into them, but I'll look at them. You know, there might be kind of two trades. Nvidia, I mean, I would look at maybe 203 puts. Let's get ready to rumble here, guys. Market is open. We are seeing Pfizer go lower. How low can you go? How low can you go? Come on, give it a little bit more selling. You're so oversold down here. 71 blasting through that MA. Come on, retest the lows. Break $70. Break $70. Come on, do it for me. NVIDIA is starting to come in just a touch here. All right, guys, I just picked up some commons. This is a 1/3 position on FI, 68.51, 68.51. This is high risk. One-third position. 68.51. Come on, bounce it. IWM getting wrecked. AMD strong. S&P gapping up yet again. Positive on the session. All right, my first trim off of the 68.51 area would be back into that monthly chart. If we fall lower, I will add 68.51. I'll add around $1 lower, 67.51 and then 66.51. So I have 3 tranches, but we are bouncing. Come on, bounce it, baby, bounce it. I'll look to trim half of my position at this 71.15 area, guys. Here we go. Come on, bounce it, bounce it, bounce it. Bounce it back into that monthly chart 200 moving average. That's where I'm looking at first trim, and I'll keep a break even stop loss. We are bouncing. Come on, give us a trim, give us a trim. Here we go. Are we buying AMD here? No. I'm just focusing on this Pfizer right now. Come on, a little bit more. You got more in you. Don't fucking crumble here. All right, AMD or NVIDIA piercing new highs, guys. This is a fadeable area if it hits 210. Pierces 210, it's a fadeable area. Has NVIDIA hit 5 trillion deep? Oh my God, it did. NVIDIA hits over 5 trillion. That is just remarkable. Remarkable. That is just downright crazy, guys. S&P still strong. IWM still weak. A lot of red on the screen. Skyworks seeing some strength. Boeing under pressure. Western Digital, Micron, semis are strong. Alibaba is strong. Nvidia up 4.2. PayPal under pressure. Enphase down sharply. Most mega caps are still green while the Russell's kind of lagging a little bit. Fubo's still strong. FI down 44%. Still ripping here, guys. Gold starting to come in just a little bit. FI still trying to see some selling here. Come on, FI. You've got a little bit more in you. I mean, look at that initial bounce. Wow, they're still trying to sell it a little bit. Are you serious? AMD semis are still absolutely flying to the high side, guys. Absolutely flying to the high side. S&P just made a new high while the Russell's continuously selling here. LiDAR stocks catching a minor little bid. AMD up 3.1. Western Union, Skyworks strong today. Oklo seeing some strength. Come on, FI. Bounce it. Bounce it, FI. Look at that gap down on FI, guys. That is just downright dirty. Look at NVIDIA squeezing to the upside here. That is just ridiculous. Crazy, crazy, crazy. Full-fledged squeeze mode on NVIDIA. Just continuing to surge like nobody's business. Come on, FI, I want to trim. I want to take a trim. Come on, FI. Nvidia's still pumping. SPY's still strong. Gold seeing a little bit of selling here. Market is still holding resiliency. Impressive price action in your semiconductor stocks today, guys. Intel's gone negative. Wolf's gone negative. Amazon's still green. Rigetti, quantum stocks seeing some strength. Fubo getting faded a little bit. BYND slightly green. Nvidia's trading like the meme stock. All right, guys, I'm going to put a break-even hard stop on this trade here. Break-even hard stop on FI, which is 68.51. I'm long off of the 68.51 area. So I'm putting a break-even stop loss on that trade just because it's taking a little bit to bounce. That's crazy. All right, Nvidia, come on down. Come back down, Nvidia. Come back down to earth. You're just a behemoth up here. Yep, the headlines are now pumping, guys. The first company to hit 5 trillion. 5 trillion. That's chump change. Uh-oh, FI, watch out. This stock could try to break down here. Looking a little bit vulnerable. All right, guys, it stopped me out there for a break even on FI. I repeat, I'm out of FI for break even. I would only consider this now around a breach of 68, 67, 51. I would reconsider a buy. Intel getting sold into. AMD has a really strong top wick. Gold getting sold into. SPY still holding steady while your Russell's selling off here. Oh my. I'm still interested in FI, but break even was tagged on the common shares. Did not want to mess around with that. I mean, damn, we came so close to a profit target. Holy moly, look at this sell, guys. All right, I'm going to let it pierce 67 now. I do not like that 67.51. All right, guys, 66.80 took a fill. 66.80. Holy moly. 66.80 took a fill. Holy. 1 minute reversal bounce. Yep, premiums are high on IWM. Good observation. All right, guys, my first TP now on FI is basically coming into the 70.50 area. I will take a trim of half the position. Come on. And keeping a break-even stop loss on the shares, 66.80. I'm long FI off of that wick. Come on down, Nvidia. Come on down. Gold selling, S&P selling, your Russell 2000 getting sold into. Critical metals, that's down another 5.8%. BlackBerry under pressure. Ouster still showing some strength. What volatility in this FI, guys? These are some big swings at the lows. We're talking about 3 to 5% swings within 1 minute candles, right? Lots of volatility down here on ticker FI. Again, I got a hard break-even stop loss again at 68.51. Hard stop. If it violates that level, then I need to wait for a tap of 65 to get long again. But so far, it's trying to hold it on your intraday 1 minute chart. Your S&P 500 still holding bullish structure. Anonymous asking, am I short Nvidia? Maybe. Maybe I sent out an alert. I might have nibbled on something. Nvidia is still holding really firm up here. Exceptionally firm. Let's go to that extended hour again. You can see Nvidia is still holding above its pre-market high, which is technically bullish. All right, FI is bouncing here. Come on, FI. Bounce it. All right, I'm going to look to sell, guys. I got 400 shares long. FI. I'm going to sell half of them at TP1 here. $70.50 is my target. $70.50. Oof. We're wicking. All right, guys, I sold half. 200 shares. I'm out. Sold half up there, guys. Nice 5% gain, 5 and a bit. Beautiful little trade. Stop loss, guys. I'm going to put a hard stop in the money here at 68.05. Hard stop. So I'm going to put it in the money. Hard stop. Nice trade if you caught that with us. This one could still bounce if we're down 44% based off of its previous gap down. You know, a 10% bounce is not out of the ordinary. A 10% bounce would take us back to that COVID kind of low. So your COVID low, we're still underneath that. Your COVID low is this 73.53 zone. SPY is still ridiculously strong right now. AMD up 2.5. SoFi's under pressure. Plugs under pressure. FI still down 44. Beyond. Fubo is getting faded off the highs. What the hell is this ERNA? That's up 69%. CMBM, that's up 270%. Yikes. The liquidity is thick and strong in the market today ahead of the Fed meeting, guys. Look at Pfizer ripping here. Holy moly, we are ripping. Ripping, guys. All right, I'm going to move up my stop, guys, on Pfizer. I'm going to move it to 69.38. 69.38, locking in at least a few more percentage points. Well, that was a nice little trade there on FI to start the morning. I'll take that every day of the week. TP2 is the 72.50 area. 72.50 on FI is my second trim. 72.50. I will exit the full position. Okay? 72.50. And I have that hard stop protecting the rest of the trade. So that trade is risk free. Come on down, NVIDIA. Come on down, NVIDIA. Come on down. Here we go. Come on, FI. Punch it. Punch it to that next TP zone. Again, guys, 72.50. I'll close out all of my shares. Master Sensei saying indices looked ready for hyperinflation. Yeah, I know. They've been moving that way, right? Come on, FI. FI's almost there, guys. Come on, FI. Come on. Come on, a little bit more. Oh, you're so close. Come on. Don't drop it. One more little push. One more. You got the momentum from the market. You're oversold. One more little push. Guys, I'm going to move my stop up to this TP1 area. Hard stop on FI. Kind of right back into that first trim level. Hard stop. Locking in at least that 5.5% gain. Wow, we came so close to TP1. We missed it by 10 cents there. Still got a little bit of time to firm up here. But I have a hard stop in place. Locking in about $1,500 no matter what. Come on. Your SPY is testing 689, still an absolute monster. Intel softening, gold softening. What else? Micron, Western Digital up 10.5%. That is just ridiculous. Absolutely ridiculous. Guys, I'm about to get stopped out on the other half of my shares on FI. Again, it's a hard stop at $70.50 for me. Wow, they're defending it. They are defending it. Come on, give us a punch higher here. Give us a punch higher. IWM's trying to bounce. Intel really selling off here pretty sharply. Energy stocks are holding some strength and value right now. Interesting. The market is still in beast mode, although you do have some top wick distribution forming in your S&P 500, guys. You still have the IWM negative, you got Microsoft negative, you got Meta negative, Tesla's about to go negative. You've just got really semiconductor strength holding up the tape today, guys. That's pretty much all I'm seeing. You know, a lot of the stocks that Nvidia gave shout outs to are ripping. You look at Palantir today. Wow, what a move on PLTR. That's crazy. Let's look at VRT. Yeah, pretty much all the stocks that Nvidia gave shout outs to yesterday are ripping. CDNS, Cadence, Design and Systems, ripping. That's crazy, guys. Absolutely crazy. Let's look at these quantums. QBTS, IONQ. All right, Pfizer is making a move here, guys. Come on, make it. Push it, push it, push it, push it. Come on, push it. Nice. Push it to TP2, 72.50. Come on. Come on. Come on, get there, get there, get there. Again, it wants to try to retest its COVID low, but I like selling just a little bit before, just to lock in profits. This is a big area. I'm going to move up my stop loss. I'm going to trail it a little bit here. I'm going to move it to 71.15, hard stop on FI. 71.15, just locking in more gains. Nvidia is still a beast, trading above its PM high. Coming in a little bit. S&P seeing some sell side pressure. Come on, FI. You're 50 cents away. Come on. Get it there. Been patient. YNVX trying to push. Serve Robotics trying to push. CRML under pressure, Coinbase under pressure, home stocks getting slapped, Boeing under pressure. Again, home builders are getting hit really hard today. Solar stocks Enphase down sharply still. Affirm's under pressure. Block ticker XYZ, that's seeing quite a hard day, down 4%. Nvidia, we are falling. Falling for you. All right, guys, Pfizer might hit my 71.15 stop here. 71.15 hard stop. No matter what happens here, I will exit my commons. It's a hard stop. Still holding above that area. 71.15 hard stop. They're going to take me. There it is, guys. All right, I'm all out of my FI commons. All out. That is a beautiful gain, guys. Beautiful gain on the runners of just over 6.5%. Beautiful. That's what I like. I like starting the morning. A couple grand in the pocket. And just be careful. This FI, guys, could go through a retest of the lows. Can look at other trades. I'll look at S&P 500 here. I'll let you know if anything happens on Pfizer. Don't be surprised if FI revisits the lows, guys. You know, a lot of the day traders are probably going to be out of this stock at some point today, but obviously it's trying to hold. But our money was made scalping that. Let's look at some of these other ones. Your S&P still holding technical structure. Let's look at Bloom Energy here. Yeah, BE is also coming into a short zone, guys. Wow. BE coming into a short zone for Bloom. I do not mind that at all. Let's look at BE here. What are these put options? Let's see. I'd love to see BE come in. Wow, your Russell's getting a fat bounce here. Quantum seeing some decent liquidity coming back into the picture. Bloom Energy, high risk. Let's see what a 120 put would do for us. I mean, that would be a crazy move back down. A 120 put for October. I'm gonna take two contracts, guys. 120 end of week put option on BE. Again, it's high risk. High risk. Take a 120 put on BE end of week. 3 contracts, so it's fairly small size. Again, I'm rolling some of my profits from FI into the trade as a bit of a lotto trade. So 120, it's high risk. Don't go in if you can't afford to lose whatever you're putting in. But it's a high risk. Nvidia is still holding above its pre-market high. Here we go. Here we go. IWM is still bouncing pretty firmly here. Crude oil, what is crudy doing? Crude oil is trying to bounce here as well, trying to retest its pre-market high. Oof, Bloom Energy ripping, IWM ripping, S&P still ripping. Market is still holding crazy resiliency right now. Crazy resiliency. You got S&P up 0.3, QQQ still leading the charge to the upside today. IWM trying to go back to the positive side. It did go positive there. Gold is trying to hold 4K. Nokia down 4.38%. Anyone still short that name? You're printing. Again, I took all my profits. Datavolt under pressure. Palantir ripping up 3.5. Rigetti ripping up 3.5. Amazon just barely positive on the session. Let's look at Generac here. Nvidia still holding steady. Big bounce on Generac. Wow, I missed that. That hit my level. I got the alert, but I was too busy trading FI. That was a nice bounce. Anyone took that. That was a clean back test of that EMA. What a bounce on Generac there. That was clean, guys. Very clean. You're getting all of these high short interest names starting to push ENVX, Ouster, your LiDAR theme, catching a decent sized bid right now. So LiDAR, quantum, and semiconductors are pretty much your thematic trenders today. What else we got going on? Yeah, Nvidia is still ripping here to the high side. Bloom Energy still ripping to the high side. IWM still bouncing phenomenally well. Nvidia can't stop, won't stop, up 5% over that 5 trillion club. It is an elite club trading in a club of its own. It is still a beast. Bloom Energy still ripping. SoFi down 1.1. Intel negative. Open Door seeing some slight strength. Nokia down 4. Fubo, pretty disappointing price action in Fubo, guys. I mean, that's gotten a faded full round trip pretty much. You know, what looked to be a very solid positive news catalyst looked like they were going to probably run Fubo up to 5. Getting absolutely wrecked. I mean, I think there's a buy on Fubo if you let it sweep its gap fill. There's probably a day tradable bounce on it, but it looks like Fubo now wants, if it loses this point of control, this volume shelf, which is what we're sitting on right now, intraday volume shelf, then it's going back to gap fill. Your S&P 500 still staying pretty resilient right now. IWM still staying resilient. AMD, a little bit of sell side pressure. Gold still retesting its pre-market low, but trying to hold. Microsoft still under some pressure. Nvidia still taking all of the liquidity, not giving up anything. Maybe Nvidia is trying to print a 10-minute hanging man candle. We will certainly watch that. What the hell's going on? So Bank of Canada did cut its rates, guys. Bank of Canada reduced its rates to 2.2. Let's look at actually this Canadian 5-year yield to kind of give us a little bit of a CA05Y. So there you go, guys. Kind of the Bank of Canada cuts rates and interest rates are bouncing in the short term. So that's kind of what I'm expecting with the 2-year yield. It's kind of going by the very scripted playbook of Fed Day where the banks cut but rates push up. So That's exactly what we're seeing here in Canada. The Bank of Canada just cuts. And look at the Canadian 5-year yield, which is kind of the closest yield that the bank monitors because it's directly tied to our housing market. But look at the 5-year yield in Canada up 2.13%, but the bank just cut. So quite interesting, right? Little bit of a scripted tell as to what our yields in the U or what the US yields are probably going to be doing as well. Not a guarantee, but I honestly probably not. You know, if you're just looking at what happened there, it's probably going to maybe push TLT a little bit lower here. You know, well, here's the thing. The long end of the curve is a little bit different than the short end. The short end of the curve will have quite a bit more fluctuation. But if we're going based off of previous price history and how it typically reacts around Fed rate cuts, you're probably going to get a little bit of a bounce in yields, guys. So that's just what we've seen the last, I think, 3 Fed meetings, and we just observed it in the Canadian Bank of Canada meeting right now. So I'm thinking that there's a very, very strong chance that the 2-year yield also bounces a little bit more here. And I mean, there's this clear gap fill that I think they want to grab this liquidity. So if it were to push into the gap fill, you could get a 0.88% move higher here in the 2-year yield. All right, so that's just what I'm thinking. You know, if we look at the 10-year yield, that's also trading pretty depressed down here. It's not a guarantee, but again, a little bit of a clue, right, from another major central banker. They just cut their rates literally 3 minutes ago, and their interest rate policy just pumped, right? Look at that. Look at that pump, right? So, all right, Bloom Energy is just blooming here. Absolutely blooming, eating me up. Your S&P 500 is seeing a little bit of selling. Minor touch, guys. Minor touch of selling. Intel's negative, SoFi still negative, Fubo trying to catch a bit, Nvidia still holding up 5% on the session, Tesla's still green on the session and ripping. Crude oil is your next inventory report. That is at 10:30, 26 minutes. You've also got gold seeing some resiliency yet again, having a pretty big 1 minute candle bounce, looking like it wants to try to revisit the highs here. I wouldn't mind GLD to retest that 371 area, which I think it can. I do think it can, but gold's reacting off of the softer Bank of Canada policy right now, maybe taking a little bit of a clue that, again, Federal Reserve Jerome Powell is going to be a little bit dovish. Nvidia is seeing a little bit of sell side pressure. Again, Amazon's not looking too good right now. That's doing a full-on gap and crack, guys. You got Google bouncing off of the lows, holding some technical structure. You got Microsoft heading into its gap fill. So this market could be in for a little bit of vulnerability. Nvidia's the big king, right? That's what's holding things up. But there's quite a bit of selling on happening in Microsoft, Amazon. Let's look at Mr. Apple Dapple here. Apple looking exceptionally bullish, but a little bit extended intraday. Let's look at Meta. Meta also reports earnings after the bell. So they're kind of selling into the stocks that are reporting after hours, right? A little bit of de-risking. That's probably the smart thing to do ahead of earnings reports. Nvidia is starting to come in. Come on down, Nvidia. Come on down. Wow, Bloom Energy just squeezing. Absolutely squeezing. Let's look at that Russell. That IWM is still slightly negative on the tape. Yeah, TLT chart doesn't look bad. And again, this usually is just a one-off day pop, right? A one-day candle doesn't make a trend. You know, if the yields get a one-day pop, it likely is going to get bought up, right? You know, I think that if they drop TLT, it is a buying opportunity. But it's just going to be, it usually doesn't last long, right? The interest rate pop. They usually sell into it. Stoic saying, once the Fed cut happens, we might get a rally and crash once JP talks. Yeah. Yeah, you know, I'm excited. I love trading Fed days because there's a high probability setup that, you know, if the market rips, you fade it. If the market dips, you long it and then fade it. So there's kind of two opportunities to trade. There's that initial kind of minor volume, intermediate volume that comes in once the press conference or once the interest rate gets announced. You usually get a pop, an algo pop based off of softer yields, which is generally a bit of a fading opportunity. But then the big directional move comes in once Jerome Powell comes on and he gives you the signal that he's wearing a purple tie. That's it, man. That's it, right? If the market's popping on his purple tie, you fade it. If the market's dropping on his purple tie, you long it. That's the strategy, guy. It all comes down to what color tie he's wearing. That's it. If it's a gray tie, we're all fucked. So the big thing is what color tie is Jerome Powell wearing? That's what's going to decide if we make money or not. Not the technicals, not the fundamentals. Of course, I'm kidding, guys. BE is just absolutely a machine. Nvidia is starting to come in just a touch more. I like it. Drop it low, Nvidia. Drop it, drop it, drop it, drop it. Come on down, behemoth. Come on down, behemoth. Look at these pre-market levels, guys. You're coming into pre-market high level. Here we go. Gold is ripping, guys. Again, your next big data set, guys, is 1030 crude oil. Crude oil inventories is your next big data set. Look at BE retesting that earnings high. All right, Nvidia coming in hot and heavy, guys. Here we go. Drop it down. Retest that opening range low. Yeah. Every time there's a Jay Powell strong discussion, I think of that photo of him eating fast food by himself. I know. I know. All right, so far, what else can we observe in the market? China stocks still holding steady. Again, semiconductors are the backbone. Webull, I shouldn't even mention that. That's down another 11.11. Make a wish on Webull. 11.11, down 1.59%. I wish that Webull pumps to 15 bucks. I wish that someone buys Webull out. Frig. SoFi down 2% now. Interesting, eh? Interesting. Usually SoFi gets a little bit of a beneficiary, but that's getting faded right from the highs. Amazon still looking disgusting down here. Meta still looking absolutely disgusting down here. Let's look at Tessie. Tesla still holding some structure up at these highs. Not bad. Your Russell 2000's trying to bounce here just a touch more. Interesting. Let's look at that S&P 500. That's also coming in just slightly, guys. Slightly from the highs. Really, I mean, Nvidia is the S&P 500 right now. That's pretty much clear. Like, whatever Nvidia does is pretty much what the S&P is going to do. That's kind of what I'm watching here on the back end. You know, very similar looking chart, S&P and Nvidia. Very similar. Yeah, exactly. Webull is a cool name, but fundamentally it doesn't. All right, BE running away. AMD selling off a touch here. Bank stocks like Morgan Stanley have pretty much imploded a little bit. Not imploded, but they're negative. JP Morgan has gone negative, so maybe a little bit of a fading opportunity in financials, guys. Enphase still down 12. Housing stocks, home builders are still under pressure. Again, there's a lot of red on the screen today, guys. There is a ton of red on the screen actually, but they're disguising the selling once again through your semiconductor strength. You know, you look at RSP today, guys, down 0.38%. And look at SPY today. SPY has been flirting with positive price. SPY is positive up 0.28%, but RSP is down 0.37%. That's how you know there's a lot of selling under the hood today. You know, that's crazy. So again, that's why I'm watching Nvidia, because if semiconductors give up the goods, you're going to see quite a bit, you know, of potential downside. I'd love to see a big flush into Fed meeting. I'd love to see that. So right now you have pretty much 1, 2, 3, 4, 5, 6, 7, 8 sectors of the S&P 500 red. You've got 1, 2, 3, 4 sectors green. So tech XLK is holding things steady. That's up 1.07%. Industrials are up 0.72. Energy up 0.54. Utilities are up 0.58. Nvidia is starting to come in a little bit. SPY starting to see some sell side pressure. Come on down. Nvidia, retest your PM low or even this opening range low. Come on. Come on down, Nvidia. Bloom Energy still squeezing. SPY getting a little bit heavier. AMD softening. Intel's kind of just pausing. Yeah, there's kind of, it's a double-edged sword, right? It affects its NIMs, their net interest margins. Um, but yeah, it's supposed to be bearish for sure. But there's usually this lag period where banks will kind of have a month of when the Bank of Canada, or sorry, when the US Federal Reserve lowers rates, you know, usually that first month after the rate decision, there's a spread differential of, say, a quarter basis point cut, where the banks will try to capture that liquidity. You know, they don't offer it to the general public right away. So when the Fed cuts, the banks get that cut pretty much right away. Whereas the public don't capture that spread right away. The banks are kind of profiting an extra quarter basis point. So there's usually that month after a Fed rate cut where financials could actually stay a little bit more firm. But generally speaking, yes, the rate cuts do affect their profit margins, their net interest margins. But usually the banks don't cut right away, right? It takes a little bit for it to affect the general public. It's a little bit of a scam that they have going on. Bloom Energy still ripping, SPY holding, Nvidia holding off pre-market high like a beast. Craziness. Ethereum back to the positive side. Western Digital, that's up 11.4% on the session. Absolutely insane. Insane chart. Look at this WDC, guys. New all-time high. Ripper. Micron, still ripping. AMD, still ripping at the highs. Intel, still ripping at the highs. Let's look at this S&P 500. Again, guys, I don't know how much more movement there's going to be. Once the volume dries up here and thins out, I'm a little bit concerned that they just chop us around and burn theta. But we have made money on FI, made a nice chunk on Pfizer, guys. That was our top long setup. Nice gap down of over 45%. Picking some lower boundary support areas. So nice job if you caught that with us. Excellent little trade. Bloom Energy still ripping to the highs. BE still ripping. SPY starting to come in a little bit. I mean, typically with the lower rates, people are going to pay, but banks will also try to increase sometimes credit card premiums and rates. They have little shenanigans that they do. But yeah, usually it does allow for more loans to increase, more business to increase, right? Because it's more stimulative, right? Lower rates allow a little bit more of the public to start taking out loans at lower rates. It tries to stir up business. LTV ratios will decrease, right, with lower rates. My target on Nvidia is $36.84. No, I'm just kidding. Yeah, my near-term target, I think Nvidia could head to opening range low. I would love to see it come back into this gap fill down here. I still think that's a chance, a very good chance. But the stock just keeps on getting gobbled up. Gobble, gobble. Thanksgiving turkey. Good morning, Ram. How you doing? TC, please give your prediction about today, the rest of the week. Also a very important question. So for the rest of the week, I mean, honestly, my opinion is we need some softening in price. S&P has run too far too quickly. We're extended on really kind of all metrics. Like look at this hourly rally on the S&P SPY. Exceptional rally. Putting in that negative divergence. We're into a decent resistance. So I would lean more bearish, but again, this market is just something else, right? You still have, my fundamental opinion is that we need to take a breather. The markets need to fall. Technicals also are showing that we're a little bit stretched here in the near term, but the larger daily and weekly chart trend still show that we can move higher. You look at this daily chart inverted head and shoulders, that upside pattern takes us to about 692. But that being said, I don't know if we're going to fulfill that. Maybe we spike up there today off of FOMC. I would literally probably short the hell out of that level with a big size put option, 50K maybe in that area. But I am already leaning slightly bearish on the market. But this market is in full beast mode, guys. The weekly and daily chart trend is still very, very strong. Very strong. Do we need a pullback to some daily chart moving average? I would think so, but it's not a matter of what I think. It's a matter of what the markets want to do, right? SPX is still trading into the stratosphere here. 6,900. How close are we to 7K? We're about 1.3% away from 7K on SPY, on SPX, which is pretty intense. But we're definitely extended, guys. We're extended. How do we set a stop loss on our options? As you know, I take 30 to 40 days expiration. Well, it all comes down to risk management, right? And size. Two questions you need to ask yourself is how big of a position are you taking in your options? Is it 1% of your portfolio? Is it 5? Is it 10? Is it 50? If it's 50, you probably need to go back to risk management 101. But if it's 1%, I mean, I sometimes a lot of times, I mean, I enter zero DTs, which are not even 1%. It's like a quarter percent or 0.1% of my portfolio, and I can let that go to zero and I can sleep at night. If it's a bigger size position, usually most of my trades that I send out alerts are between 1 and 2% and I accumulate, so I let them run quite a bit to the downside, but it all comes down to, it's a tough question, right? Everyone's different. Your risk analysis, how much capital you're putting into the trade. A lot of scalpers will, if they're just in and out, they'll keep a 15% stop loss. Boom. That's it. Right? And they're going in with size or even a 10%, 5% stop loss. So it's all relative, right, to your portfolio. It's a tough question to answer. You can't really give a broad-based answer for everyone. Dom C, I'm shorting Trump coin right now. Wish me luck. Miners and minerals looking beautiful as always. Smart move. I shorted DJT and it paid well. Let's look at DJT. Yeah, it's coming down. Filled the gap. I think that it's technically a long above this prior day low. If you lose prior day low, then it's a short down to 1580. So right now it's a long, guys. Just be careful. This one could rip your face off. But if you lose PDL, then it's a short down at least to 1580. Your Russell 2000's acting quite well. Bloom Energy softening just a touch at the highs. Absolutely ripped to the upside. Crazy mover. Nvidia still just holding quite steady. Come on down, BE. Come on down. Your S&P still holding steady. You go about 10 to 20% of your portfolio as you only trade SPX and SPY. So, I mean, again, that's going to come down to your risk. It's a fairly decent size position, but comes down to your risk tolerance, man. I mean, and how confident you are. Like, if I'm trading 10% of my portfolio, I'm probably going to keep a fairly tight stop loss. I'm probably going to keep, I don't know, like 10%, depending on the level too, and the time. At least you're giving yourself a little bit of time, 30 to 40 days out. I'd probably keep a 10% stop loss. Even that's tough. Maybe even 5%. I'd probably keep a 5%. 5 to 7% stop I would keep. All right, what else we got? Baba's still holding steady. All right, we got crude oil inventories in 6 minutes, guys. WTI crude in 6 minutes. Right now, crude is testing its pre-market high. There is a little bit of a rounding formation here that's trying to trigger and break out. Well, right now, banks are not really reacting. I think that any sort of a bounce in banks are looking like a fading opportunity in the very near term. We discussed how it impacts their net interest margins, their LTV ratios. But there's usually that small window about, 1 month window where banks will capture the spread differential. They'll get the cut by the Federal Reserve, which will certainly allow them to maneuver their books a little bit. They won't really offer to the general public right away that new interest rate. It'll take a little bit of time for it to filter to the system. So there's about that 20 to 30 day window, about a month, where they capture that. So any sort of a pop, if banks get a pop, I think it's a short. I know you're looking at JPM here. I know you're already short JP Morgan, so JP Morgan is at the top of its wedge. I would still like to see it kind of do a little bit of a grab of liquidity through this trend line and then a little bit of a sell-off, but you're just chopping inside of a wedge pattern, and the wedge does look somewhat bearish here in the overall near term. All right, maybe Bloom Energy is ready to come in here. We are seeing a decent amount of selling off of that high. Again, I still have a bit of a Lotto 120 put. It's really high risk, guys. That's why I only went in with 3 contracts, which is quite nothing for the portfolio. All right, let me see what else is new. GSK, GlaxoSmithKline, having a nice day. That's up 6.25%. GSK acting quite well on the session. Nice. Look at that. GameStop down. Albemarle Marley seeing some strength. What else do we have here? Gold still trying to push above its opening range high. I'm just doing a quick scan here, guys, of the market. Come on in, Bloom. You're up 22%. Give back half. At least half. Neo having a good day. Rivian having a good day. IQ, guys. Another pressing higher here for IQ. I like it. We are obviously long IQ. We did take a trim of our long position. You are into this interesting area. I'm considering actually selling because I'm slightly bearish on the markets. IQ has had a nice bounce. That was a clean technical level, upsloping trend line, Fibonacci level, piercing through that EMA, big bounce on IQ, guys. You know what? I'm going to take profits on IQ. I'm just going to move more capital defensively here. I'll send out the alert. Yeah, that's a decent area for IQ, guys. That's a decent area. All right, I'm all out of my IQ, guys. A little over 14% gain. Excuse me. All right, crude oil inventories, guys. Crude inventories are set to be released here in T-minus 2 minutes. 2 minutes. I'll pull up crude here in a second. You know, again, I am interested in trading oil if it dips into that gap fill down below, which would be on WTI crude, it's around 59.13-ish, 59.15-ish. I would consider trading it. USO, if it dips down to gap, I would consider trading it. Oh, I got more coffee here. So again, nice winner on the books for FI, guys, Fiserv. Hoping that BE and NVIDIA start to see some sort of a sell side pressure, but the market is trading quite firmly right now. Let's watch this WTI crude here, guys, as inventories are set to come out for crudy. Crudy is spiking. Crudy is spiking. Let's see if that's initial liquidity pop and grab. Uh-oh. That could be slightly bearish for the market, guys. Slightly bearish for the market if crude oil inventories are somewhat decent here. I'm just going to pull them up here. Still populating here. So far, you can see that investors are getting the data ahead of time. SPY still holding steady. XOM coming in a little bit. Sorry, XOM, Chevron, they're on watch for a bit of a pop here. Chevron looks like it's trying to break out. XOM looks strong. Ticker RIG looking decent. Energy stocks are catching a bid. Oxy, guys, OXY, that's looking like it's into a double bottom. Oxy's moving here, guys. OXY. SPY starting to see some distribution. What are crude oil inventories? Come on, give me the print. Give me the print. Crude oil inventories minus 6.85 million. Holy shit, that's a huge print on crude oil inventories. Expectation was for minus 0.9 million, coming in at a huge drawdown of minus 6.85. That's a mega drawdown. Distillates, also a massive drawdown in distillates. And then gasoline, wow. So it's a triple beat. Bigger than expected drawdown on all of the inventories. We'll see if it can get a little bit of a more of a pop, but that is a decent report that should send crude inventories higher. SPY still holding strength. Interesting. Interesting. Watch out for miners as well. They could be slightly impacted by the strength in energy. XLE's popping. XLE has been one of the stronger sectors already on the session, and it's now popping above 88. So big print on energy, guys. The inventories support higher crude prices. Again, we will see if that's the reaction. But so far, big triple beat across the energy inventories. Massive drawdowns. Look at this VST, guys. Once again, having a stellar day. Trying to push to the high side, Vistra. Man, there's been some serious accumulation that's occurred in this name. VST. Look at that reversal. Yesterday, big sell-off. Boom. Just an absolute reversal to the high side. Come on, Vistra. Put your big butt up there. All right, your S&P 500 is starting to see a little bit of selling at the highs here. Just a touch of selling. Nothing crazy. Crude oil, WTI crude still trying to break out above its pre-market high on the 10-minute basis. It hasn't closed yet above pre-market high. Obviously, good morning, good morning. How do you see Oracle? I'm waiting to come in a little bit more. Let's take a peek at Oracle. Wow, I didn't even realize that had a hard sell today. Holy moly. Thanks for bringing that to my attention. Yeah, Oracle's got a bit of an H pattern here, bearish. Very bearish 4-hour pattern on Oracle, guys. And you can see that Oracle has tried breaking out of this channel. Let me darken up this little channel a little bit. You can see Oracle broke out, failed, tried breaking out again, has another failure. I mean, this could easily go down to the lower boundary channel. If you lose this 4-hour chart, EMA, and trigger a little bit of this H pattern, bear flag, that's got quite a bit of downside move. 233 based off of that bear flag, but yeah, it's looking pretty filthy. Looking like it wants to fill that gap, guys. You know, and then one could argue there's also a potential head and shoulders that needs to be monitored on Oracle. You haven't really broken the neckline just yet, but you're hanging on there by a thread. Definitely by a thread. Interesting. We will see what happens to ORCL. I mean, right now you are at support. You could long it as long as the market stays strong, keeping a tight stop loss kind of below this area, but it does look like it wants to break lower. I think that if you get this pop back up to say 277-ish, it'll probably get slapped right back down. All right, so far crude really isn't doing much. It's trying to break out on the 10-minute chart. A lot of high volume there that is seeing some selling. You got USO coming in a little bit, XOM, top wick distribution, CVX. That one's actually still looking constructive, guys. Chevron's looking really constructive. Rig looking pretty decent here. I've been considering buying Oxy down here, guys. Oxy, I think the risk has been kind of slapped out of it here. Although it's looking like another H pattern, you're kind of trying to hold this double bottom low. And I'm considering going long Oxy with a stop loss kind of right here. You know, obviously earnings are coming up. That's the only hesitation I have. Interesting. All right, we are seeing AMD trickling a little bit lower. Your S&P 500 still trading at 688.97, holding quite steady. Bloom Energy, guys, that's starting to come in a little bit off of the highs. I still think that this stock is also very, very stretched. Lots of momentum, though, behind it. Would not be surprised to see this one do the good old-fashioned gap and crack. We will see. Crude is starting to spike here, guys. Crude oil is starting to spike higher here. I'm going to look at some Oxy calls, and I'm going to keep a tight stop loss on that. But I am looking at getting now into the energy trade, guys. I'm going to look at $41 calls for Oxy end of week. $41 calls for Oxy. Still trying to get a positive 10-minute candle close. It's got a minute and 40 seconds left. Gold is seeing some selling. AMD trickling lower now. Your S&P 500 still just chopping sideways right underneath prior day low. Come on, Oxy. Let's squeeze it. Push it. Still holding some technical structure. This is a 10-minute candle breakout attempting. This is a 10-minute candle breakout attempting above pre-market high. Strong sign so far. Your S&P 500 is starting to sell off, guys. So SPY is starting to see some net liquidation here. Come on down, S&P. Come on down. Look at that. Bloom Energy softening a little bit. Nvidia is still holding well above its pre-market high. Energy stocks are still squeezing. So you did get that 10-minute candle close breakout, guys, on crude WTI. We want to see if it can confirm the breakout on WTI crude. Again, inventories do support it, but we will see what happens here. All right, crude oil is trying to go for its prior day high on WTI, which is sitting at 60.58. SPY is trying to trigger a little bit of a bear flag on your intraday 2-minute chart. A little bit of a bear flag pattern. Big area for crude coming up here, guys. Big area. Really sizable bid. Alright, SPY is starting to trickle down here, guys. SPY is starting to trickle down. NVIDIA, come on down. Here's the break in SPY. Break in structure. SPY's losing that 1-minute EMA 113. Looking for a new low of day, which would take us back through that opening range low. If we hit that OR low, you likely will fill the gap. Crude oil still trying to push. Fubo floating back to the highs. You got Bitcoin negative. You got Microsoft down 0.73. Russell's flat. Tesla went negative. Meta's negative. Google still at 0.57. Nvidia up 4.82, holding the market steady. Oxy's trying to squeeze here, guys. OXY. We ain't taking those oxys. We on Oxy today. Oxycontin. No, don't do drugs. Nvidia softening a little bit. Crude is still seeing a little bit of selling off of that prior day high. A little bit of selling, which is natural. Let's look at your S&P 500 again. That's looking quite heavy right now. SPY and Nvidia looking a little bit heavier. Here we go. S&P drip, 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 drip. Gold is dripping. Yields are green. Dollars green. VIX is green, guys. SPY is falling. Come on, Nvidia. Here we go. Nice drop in your S&P. SPY breaching. Oh, SPY is selling, guys. S&P ripping to the downside. NVDA starting to sell off as well. You can see the sell side pressure in NVIDIA. Go NVIDIA, go. Energy stocks are still trying to hold some value. Crude oil is seeing a little bit of selling off of PDH. Oxy, $41 calls just hit in the money briefly there, guys. OXY, 41's just hit briefly in the money there. Nice little gap up through that $41 area. Come on, Oxy. Come on, energy. Squeeze. Capture some of the semiconductor liquidity. Oxy's trying to squeeze here, guys. OXY. Come on. Hit TP1. Go, go, go. SPY's new low of day incoming on your S&P 500. NVIDIA now getting pretty heavy. Heavy, heavy, heavy. Heavy, heavy, heavy. Nat gas trying to climb from the deep dark depths below, making a full-on red to green reversal. Crude oil up 1.1%. Energy stocks, we'll see if they can capture some of this liquidity that semiconductors are seeing some distribution. And gold trickling a little bit lower. Your Russell's negative. Amazon went negative. Microsoft down 0.74. Apple still green. Google still green. Nvidia obviously still up 4.5%. Meta, Tesla struggling. JP Morgan negative. Netflix trying to go to the dark side. Starting to see a little bit more selling in the market. Nvidia coming in back below 210. Chop it down. Chop the big bad boy down. Come on, give us a move to that 2 0.07 opening range low. Come on. Is that too much to ask for? 205 puts on Nvidia, Aviz? Is that what you're looking at? 205 Nvidias? What stock? Yeah, Nvidia? Okay. 205 puts for October are right now 244 on the bid, 246 on the ask, 244 on the bid, 247 on the bid. They're climbing, Nvidia's falling. SPY's softening. 255 on the bid for Nvidia. They are falling here, guys. 260 on the bid for Nvidia. They're ripping to the upside here, though. Look at Oxy, guys. Oxymoron. Oxycontin. Ripping. Beautiful job there on Oxy, guys. Excellent, excellent, excellent. I like it a lot. Keep squeezing this bad boy higher. Go, 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 Oxy, go. Squeeze you, squeeze, squeeze, squeeze. So you're into that first little fib area, but I'm expecting 41.28 potentially. That's a nice move, guys, on Oxy. Really strong move on Oxy. The spread is blowing out on Oxy, guys. Blowing out. Beautiful. Look at that, guys. All right, guys, I'm trimming half of my Oxy here. Trimming half of my Oxy calls. Beautiful trade. Again, guys, I sent out that alert to the live trading group. Via Telegram, we entered Oxy 41s at 44 cents. Just took first trim at 53 cents. Moving stop loss to break even at 44 cents on the Oxy calls, guys. Nice little trade there based off of crude oil inventories, and I still think it can push higher. Crude is still looking constructive and trying to break out on its 10-minute chart through that prior day high. So energy stocks simultaneously could rip. While the markets sell off, energy stocks could capture some of that semiconductor liquidity. But nice little Oxy trade there if you caught that with us. Yeah, that sucks, that your brokerage is having issues. I hope it's not some AWS BS into Fed day. That would piss me off, man. This is one of my favorite days to trade. All right, Nvidia softening under pre-market high. This is the first major dip through pre-market high, guys. First major dip. Come on down, Nvidia. Come on down. BE seeing a little bit of top wick. SPY still looking heavy. Come on down. SPY still trying to hold steady. Crude oil still trying to push here. You'll have to sell it flying blind. Yeah, right now Nvidia's dropping like a rock here. The 205s already are at 267 bid, 268 and climbing. Come on down, Nvidia. Here we go. Nvidia's seeing some more hard distribution. Let's go to the regular trading session on Nvidia. You can see that it's still exceptionally elevated and extended. Drop it lower. SPY, new low. Bang, bang. Bang, bang. Oxy's holding its gains while SPY is drilling. Look at that, guys. Oxy's still ripping here. I like it a lot. Come on, a little bit more downside, Nvidia. Give us. You've paid the bulls. You have paid the bulls, guys. AMD trickling below its opening range low. So AMD already testing its OR low. You can see the relative strength in Nvidia. Nvidia is trading above its OR low while AMD is below it. SPY starting to sell. Here we go. Chop it down. Chop, chop. Come on down, Nvidia. Our puts are paying, guys. Our puts are paying. Come on, a little bit lower, S&P, a little bit lower, Nvidia. YS, may I ask about UNH? Sure thing. UNH, what, they reported earnings? I know it was or did they report earnings? Yeah, they did report earnings. I haven't really looked into it, but stock is down. I'm hoping for a retest lower. Chart pattern still looks constructive, like it wants to move higher. I mean, it's still a no-brainer down here for long term, but stickler for price, I like minimum retest I'm looking for is 335. I was still looking for a 301 retest to enter. Don't know if I'll get that, but if the market sells off, 5% or so, we may get quite a bit lower, but I would wait personally at least for a 335 retest on UNH. I don't know if we're going to get it, but that's kind of what I'm looking for. All right, Oxy's still pushing, guys. Crude oil still trying to push here. Come on. What a bounce there on S&P, guys. Yeah, Ram, I closed my Nokia shorts from in the pre-market. So I sent out that alert to the live group. I closed that out in the pre-market. So that was a nice little win, but that paid us. That was a nice easy one. That was a nice easy one. And look at the candle formation. This is a little bit of an educational trading analysis, guys, intraday. One, stock was getting extremely stretched on the daily chart, right? We can all see that. 4-hour chart, extremely elevated. Hourly chart, really elevated. But intraday price analysis, this is some candle formation. Look at this candle formation. So you had that big dip on the 10-minute chart into that impulse green candle. Got a big buy program. You printed that daily chart hanging man candle on the 10-minute chart, okay? That was your first signal that there's likely going to be distribution. Go to the 20-minute chart, also followed by another daily chart hanging man candle. And then they wicked it through, trying to stop the shorts out, and then they slapped it down and reversed it. Technicals 101, candle formation, candle by candle, nasty. Those daily chart, or sorry, those intraday hanging man candles are really, really key, guys. I would highly suggest you monitor those and try to observe them and research a daily chart or an intraday hanging man candle, or daily chart hanging man candle is even more powerful. But hanging man candle formations, they're quite nice to trade off of. They have a high statistical probability when you accompany it with other factors, okay? So that paid quite nicely. Now this pattern I think can just chop around here, maybe another intraday kind of M-top formation building. Really it becomes another full-fledged short once you crack this 730-ish area. All right, Nvidia is still holding steady here, trying to recapture its pre-market high. Crude oil, guys, still looking pretty strong. WTI. Thanks for... No problem, Ram. No problem. You're welcome. Prior day high. We're still trying to get through this area, but look at what happened on crude, guys. 10-minute breakout candle, confirmed by another 10-minute higher close. Typically, you get a retest and then a continuation. So that's what I'm expecting. Whether or not we get that, it really could keep squeezing here the way inventory crude works. Crude has those futures contracts that are super volatile, so a lot of oil energy traders trade this asset, which could keep squeezing pretty easily here. And then we're in the next 5 minutes, crude oil, WTI crude is going to get potentially a positive hourly close through that prior day high. That would be even more bullish. Look at them squeeze. WTI, guys. That was some very strong inventory numbers for crude. It supports bullish price. Huge triple beat. Inventories, distillates, and gas. Huge triple beat. So that's why I decided to enter those Oxy calls. We caught that little bit of a break. We've already trimmed the position into this first area. My next real target is this 41.15 area, which I think is going to be easily hit. And then bigger area up here. Let's flip back to the S&P 500 here. S&P, you can still see, is seeing a little bit of sell-side rejection. 10-minute chart of SPY, you've had a nice little bounce here off of a 2-minute EMA 113. Look at Oxy. Oxy's squeezing. Let's go. If you didn't trim, this is you're giving you a retest, but crude oil is ripping, guys. Ripping. Fly, 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 fly. Let's go. Let's go. Put that on your radar, guys. Huge beat. Don't be surprised for a tiny pullback, but what a breakout there on Oxy. What a breakout there on crude oil. Stunning move across the board. That could apply some downside pressure to the market. Look at AMD starting to melt a little bit lower here, guys. Let's see what AVGO starting to come in. Intel. IWM though looking strong. Your Russell 2000 is ripping here. Wow, crude oil is super strong. I love it. Let's go crude. Pump it to the high side. Let's look at TSM, guys. TSM. That's still coming in, but AMD melting a little bit here while your Russell's ripping. SPY just chopping sideways. Crude oil still trying to move here. Chevron ripping, guys. CVX, take a look at that. CVX is ripping to the high side here. Look at that beautiful move. XOM also seeing some strength. Hasn't even cleared its high of day yet. Quite crazy. Let's look at RIG here. High beta energy. New high of day. Schlumberger SLB starting to make a move to the high side. Wow, SLB ripping, guys. And this is the heaviest stock in the OIH. Ram, that was a live trading alert I put in the member group. So the Oxy calls was the live trading alert I put in the group. I did call it out here. I said $41 calls. I didn't say which strike because I had to leave a little bit of room, but I issued the trade alert in the group. All the info's there. But since we've already trimmed profits and taken some money, I'll go through the trade here. So the trade I entered for Oxy calls that I put in the group was $41 calls for October 31st. I entered at 44 cents and I took 20 contracts. Stop loss at 36 cents. And then the contract started exploding off of the breakout and they're still printing higher here. They haven't really moved since I've taken profits. There's a little bit of a spread on Oxy. I caught it on a 2-cent spread basis before the big move happened, which is always nice to be ahead of the crowd. But I trimmed already half of my contracts, 10 contracts at 53 cents. And I have 10 more contracts priced at 44 cents with a break-even stop loss. And the Oxy contracts haven't even moved despite the price pushing here. Oxy breaking out to new highs. The contracts haven't even moved yet, but I wouldn't chase the spread. It's going to be tough on a 6-cent spread right now. On the 41s, it's tough to chase. Market makers want you to chase it and buy the ask, and then they kind of slap it on you, but price action is still ripping here. Crude oil now taking a tiny bit of a breather, which is to be expected after a nice breakout through pre-market high, prior day high. Now you want to watch. I mean, You want to see it bounce off of prior day high. They might try to dip it through that area again, but that's kind of what you want to see it hold. You got a nice hourly chart breakout. Seeing a little bit of softening right now. But that is the area. Wow, your Russell 2000, guys. Holy moly, look at that breakout. Whole absolute bullish price action on your IWM. There is a shortable level on the Russell, which comes into this 250.30 area. But that Russell 2000 is ripping. Ripping. NVIDIA is still just consolidating below its pre-market low. Sorry, it's pre-market high. Let's look at Generac again. Oh my God, what a bounce in Generac. That was the trade and a half, guys. Let's look at Fiserv. Fiserv just quietly trying to grind lower and or higher and higher here. Interesting. IWM's going in anticipation of a dovish Fed, guys. So lower rates, typically are beneficial for small caps. So small caps are seeing some strength. Again, the markets will always view things in an optimistic outlook, right? The markets are always bullish unless it has a very, very good reason to be bearish, right? So the Russell 2000 ripping right now on the back of better than or IWM's ripping on the back of softer interest rates, guys. That's pretty much the simplest way to put it right now. You're getting that bullish front running of liquidity. People think the Fed's going to cut. People think that Jerome Powell's going to say something really dovish, and therefore they're front running the potential news event. Is it dangerous to front run? Of course it is. All right, so the Oxy spread is starting to tighten. If you see it tighten up to about a 2-cent spread, I think that is your better entry. Right now it's a 4-cent spread. It was 6, now it's 4, so it's starting to tighten up. But you don't really want to buy it on a big spread. IONQ moving, yep, IONQ is moving, obvious. Gold trickling down, still up 1.3, but softening a little bit. Nat gas is starting to get going, so now you have another energy commodity, guys, that is starting to rip here to the upside, which could only apply more upside pressure to your XLE stocks. Remember, a lot of these oil plays have a ton of exposure to nat gas as well. Look at NVIDIA falling. So nat gas, we covered our short yesterday. Beautiful little job since it's bouncing today. Look at NVIDIA, guys, coming down. Pay us, NVIDIA. Pay us. I want to see them pay us. SPY starting to trickle down here a little bit. Losing its volume shelf. Guess what, guys? So I think the big lotto trade today is on the put side of the market. Just fully honest. My downside move that I calculated today, again, obviously it's subject to change, but my downside move takes us to 678, so it's about a $10 fall that could happen, which would be about a 1.5% down move if this FOMC becomes a bit of a buy the rumor, sell the news. And again, the big thing I'm looking at is the Federal Reserve interest rate projections and changes really going into the new year, 2026. So we know December we're going to get another cut. That's pretty likely. It's about an 85% chance. But what happens in January? Does the probability swing in favor of a hold or for an additional cut? Time will tell. Come on, NVIDIA, hit this TP1. All right, members, if NVIDIA flushes into this TP1, I'll look to trim half. Half of my contracts. Come on, give me a little bit more. You're still up 3.71%, NVIDIA. You're full beast mode. You're full beast mode. SPY bouncing though. IWM is ripping above 250, guys. The Russell is insane price action right now. Full bull beastin'. Crude oil, another high of day. Boom. Let's go, Crudy Rudy. Look at crude ripping, guys. Absolutely a ripper. XLE looks like it's going to fly into this gap fill. No questions about it. XLE looks like it's going to press higher. XOM hasn't even broken out yet of its high of day, but likely going to start going. Let's look at some of these other energy complex. CVX still looking pretty bullish here. Let's look at Halliburton. Halliburton. That's not the right one. That's a different aeronautics. Halliburton. Yeah, Halliburton. Ripper. Absolutely a clinical breakout. Wow, that hourly chart is looking coiled. Holy. Halliburton. Halliburton's got some serious momentum here, guys. Oh my goodness. Even for a swing trade, this looks like it's going to head at least to 20, 30 bucks. Wow. Wow. Pretty crazy. Wow, look at this Russell, guys. You're hitting resistance right now. 250, 30 is a shortable level. It's aggressive. Letting it sweep this area. Again, it's aggressive. You're piercing a major area right into a red bar zone. This is a shortable level on the Russell. I'm not specifically doing it. I'm a little bit nervous to short it. But that is a technical level. If you're an aggressive trader, that is a shortable level right there. I could see us getting a nice little pullback. That's a huge move, though. Huge move. Very impressive. Very impressive. AMD still chopping around. Nvidia still chopping around, guys. Come on, Nvidia, give me more. Still up about 28% on my Nvidia puts, guys, with members. Sent out that alert as well. But looking for more. Looking for more. IWM softening a little bit. Softening a little bit. Crude oil still ripping, going for $61 on WTI, up 1.62%. Apple negative, Microsoft still negative, looking bearish. Meta still negative, Tesla negative, Netflix down. JP Morgan making that red to green reversal, testing 307, up 0.54%. Oh, indices are dry, guys. IONQ weekly looks bearish. Thoughts, right? Do you see the same? The problem with quantum right now is it's got a lot of momentum from Nvidia as well as the Trump administration. Are they dog shit cash burning companies right now? Yes, they are. Fundamentals suck. They're running on pure hype and speculation. A few contracts here and there. These valuations are extreme. But IONQ, the only thing I don't like is that IONQ is technically sitting at support here. You can see this trend line going back to 2021, 2025. So there is some support here. Technically, you could bounce a little bit back to say 70 bucks, but any sort of a pop, I think, in this name is a short. If you start closing below If you get another weekly close below this area, then you can short it. But it's right now, it is at support. NVIDIA dumping, guys. 207.50 puts are ripping. Let's go. How low can we go? TP1 coming into play, guys. TP1, come on. Rip it, NVIDIA, rip it. We're up 35% on our NVIDIA puts. Let's go. Dump it. Crude oil is still ripping. Stoic saying quantum smoke and mirrors. Yeah, smoke and mirrors for sure. Smoke and mirrors. But what about the qubits? What about the qubits, man? Come on. Jensen said yesterday, you can tokenize everything. Come on, don't be so bearish. Just buy the tops. Just buy the tops and you'll be rich. Full port NVIDIA right now. You won't regret it. I mean, the plays have run. Quantum, you ain't early right now. Quantum have run. You know, the early days were back here in, 20. They're early for them growing into their valuations for sure, but these were the early days, right? 2022, a little bit of a pop. Then really in 2024, that was early. $8 all the way to 89. I mean, 10x in a very quick succession. I would let these breathe. Is there a future for quantum? Yeah, I think there will be higher computing speeds, but the valuations are definitely a little bit daunting up here. Even still with NVIDIA giving it the good old endorsement, government contracts. Come on, NVIDIA. Sell the market. IWM is still ripping. Yeah, nuclear and quantum, I know. Nuclear has just been another one that has been running. And I firmly believe in nuclear. I firmly believe in it. The tech, but you have to understand, I mean, some of these nuclear projects to start up a nuclear reactor, I mean, how long does it take? A decade? Oklo, what the hell is Oklo doing? It's not even doing anything yet. It's all pre-revenue. Doesn't even produce any energy yet. AMD's falling. But again, that's just the market in front of us. We run on hype, we run on momentum. Oklo will have a plant by the end of 2027. Good to know. Thank you. If things go according to plan. Big if. Big if. Yeah, we are behind China. China's definitely ahead. So yeah, I'm just reading Oklo here. So yeah, late 2027, Oklo is expected to have their nuclear power plant in Aurora. Their deployment is targeted for early 2028. So that's pretty much all optimistic milestones and project timelines, providing everything goes according to plan. Expected to deliver 75 megawatts of clean, reliable energy. So just in, so what is 75,000 megawatt? That's what Oklo's plant is expected to supply, is 75 megawatts of power. Again, primarily for data centers. But how much is 75 megawatts? So basically it's can supply, the average home, 75 megawatts will supply about 15,000 to 25,000 homes of energy. So between 15 to 25K of homes, that's what 75 megawatts of power can supply. So how many homes are there in America? As of Q2 2025, the US Census and Bureau states there are about 147.9 million housing units. This includes both occupied and vacant homes. So call it 148 million homes. US adds roughly 1.3 to 1.5 million new housing units per year. So 148 million divided by 25,000. So in order for, if the US, and this is never going to happen, but if the US hypothetically were to switch everything to nuclear to power all the homes, just the homes, not businesses, not cars, just homes, it would need about 5,920 nuclear reactors. 5,920 nuclear reactors. Give or take a few. Again, it's not going to happen, but it's just fun to put that into perspective. Crazy. Yep. I'm actually all finished my coffee too. I literally made a big batch today. I got my blender here. I like to blend my coffee with MCT oil and protein powder. It keeps me wired. It's like a little hearty breakfast in a cup too. Get my extra protein in the morning. Makes it super frothy. Yeah, nuclear coffee for sure. It is. I love my coffee. I am a coffee addict. I'll admit it. I love coffee. I mean, I don't overconsume, but I do love my coffee. I do love it. All right, guys. S&P trying to recapture that volume point of control zone, 688.50. Nvidia bouncing. IWM still trending. I grind and use Chemex, but that's another level. Got picky with, yeah, you know, coffee's important. There's something called, if you're very sticky about it, some people have food sensitivities. There's mycotoxins. Some coffees have mold. They can sit. So I've done a lot of studying on coffee too. I have a nutritional science background. Not all coffee is created equal. All right, so Bitcoin right now down 0.4. Your Dow Jones Industrial Average, that's outperforming up 0.5. SPY's up 0.2. QQQ up 0.42. Russell's outperforming, that's up 0.55. Amazon making a nice bounce up 0.82. Microsoft looking bearish, that's down 0.72%.
Nvidia still strong but pulled off of the high, still up 3.9%. Apple's negative, down 0.22%. Google ripping up 1%. Meta down 0.34%. Tesla slightly negative. Netflix slightly negative. JP Morgan green on the session. Crude oil is softening just a little bit here, guys. WTI crude seeing some sell side pressure. $11.21, guys. Yeah, I'm probably going to take an easy break here. Coffee gives you anxiety, Ram, but I can do tea without any issues. Interesting. So you must have a caffeine sensitivity. Or, I mean, do you drink herbal teas? You drink caffeinated teas? Green tea? I mean, green tea still has caffeine. A lot of teas still have caffeine, unless it's herbal. Maybe it's just the type of coffee that you're sensitive to. Your Russell 2000, guys, still absolutely surging here. Black tea without any issues. Nice. Oxy taking a bit of a dip here with oil. Ooh, I love chai. I love chai tea. Yeah, I could go for a chai right now. Oklo up 8%. Western Digital ripping up 12. Lululemon really taking on the chin. China stocks still surging. PayPal taking a breather. Nvidia catching a nice bounce. Ethereum still negative. Enphase still ripping to the downside. Oh, what else do we have? AD still looking weak, guys. Wow, your Russell's just screaming higher here, guys. The IWM is kind of the play of the day. I mean, look at them squeeze small caps here on the back of a dovish Fed. They are ripping your small caps breakout. What a squeezer. I mean, my oh my. IWM looks like new all-time highs are incoming on the Russell. 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 Look at that tight range on the Russell. It's pretty impressive. Actually, very impressive. And the only troublesome thing about the Russell, see that bullish pattern. That is pretty bullish. MD still coming down. Russell 2000 trying to push. SPY catching that bid. Semis are going through a little bit of selling as the markets are firming up here. That IWM is a beast. Crude oil bouncing nicely. Oxy, this is technically a retest, a bullish retest on Oxy. This needs to hold here. This is kind of your re-entry buy on OXY. Again, I have a break-even stop loss at 44 cents right now. The spread did tighten up about 3 cents there. It's still a 4-cent spread right now, but this is where crude stocks should bounce. This is exactly where crude oil, if it bounces, this is where it should try to hold, but Seeing a little bit of sell side pressure. Let's flip back to this Russell 2000. SPY still trying to trend and push. Yep, you can see the nice bounce in Oxy right off of that zone. Big 1 minute bounce. They're trying to defend that 41 area. Just see. AMD still trying to bounce a little bit. IWM coming in. IWM starting to come in a little bit. All right, guys, I'm going to take a little bit of a break here. Again, good job on FI, good job on Oxy. Still have a couple member trades that we just issued. NVIDIA puts still, I think, could print. But I think the market's kind of just going to chop here. I'm not expecting too much movement in the major indices ahead of the Fed meeting. I don't think there's too much else that we have to worry about. We've got crude inventories. You got a little bit of GDP data coming out, Atlanta Fed GDP. But really the next big thing, guys, unless you're the FOMC statement at 2 p.m., guys, that's the next big thing. And then the press conference. We will play the press conference live. But I think it's one, you either go work out, two, you either take a nap, or I think trading right now is, yeah, I'm still in NVIDIA puts. I'm still in. Yeah, I think that's a smart idea. Workout stoic. Wait. I'm not looking to really trade anything else until Fed meeting, unless something like falls into my lap. Pretty much done for the session. I'm going to take a bit of a break here. Still going to be watching a few things, but the volatility seems to be sucked out. If anything changes, I'll jump back on the mic here. But we will see you back at least for probably, what time's Fed? 2 o'clock. So probably come back, you know, a little bit before that, just to outline some key things. Unless we get some sort of a big movement in the major indices. Still watching this Bloom Energy, kind of a lotto put trade. I mean, the 120 puts, hopefully that stock starts to come down here in the very near term. But other than that, again, nice little couple day tradable profits secured. And we will see what the market has in store for us a bit later. course, I'm trying to take a little bit of a break here, and S&P is starting to sell off just a touch. Come on, what is going on? All right, well, looks like I'm staying, guys. Let's see, if we break this little pivot low on SPY, I'll stay here. I'll give it another few more minutes here. Dollar's cratering right now. Your IWM is still super bullish. You got your dollar cratering here. That should be helpful for gold, but gold has really sold off here over the last hour or so. Bitcoin sold off. Ethereum sold off. Interesting. Snapchat having a decent day today. All right, looks like we're just going to chop here. It looks choppy. AMD is doing a full round trip to the basement. almost going negative. You have to think that that is going to push Nvidia down as well. But AMD, look at that, gapping and cracking right now to the downside, making a new all-time high off of a crazy parallel channel here. And now it is falling pretty sharply right now. Nvidia is starting to come in as well, guys. We are seeing Nvidia puts are printing here. Beautiful. All right, time to hop back here. Things are getting a little bit crazy here in the market. We are seeing semiconductors seeing quite a bit of distribution. I am looking at trimming my Nvidia puts. Considering we've consolidated, I'm going to lower this a touch lower. We'll put it. Come on down, Nvidia. Look at AMD. SPY is going nowhere. IWM is still grinding, but semis are selling. Beautiful sell on Nvidia, guys. Beautiful. Guys, we're almost up 45% on Nvidia puts. Member trade. Beautiful drop. 207.50s are coming in the money here. Come on. 207.50s. We're almost tapped in the money there. Come on down, Nvidia. Beautiful, 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 beautiful. Chop it. 207.50s are 3 cents away from being in the money, guys. Boom, 207.50s in the money, guys. Trimming half here at 460. Stunning trade. Boom. Banger. Nice trade on Nvidia. Beautiful, guys. I trimmed half of my Nvidia puts there, guys. 465. Fill. Boom. Nice trade, guys. 48% gain on Nvidia puts with members. Stop loss, break even. Look at that. You can even get a 50% trim right there. Boom. Stunning. Nvidia, we banked on the put side. Beautiful. Crude oil starting to spike a little bit. What's really interesting, that sell side pressure that hit semis there didn't even hurt the S&P 500. Your NASDAQ is coming in a little bit, testing that prior day low, but what a drop there, guys. Clinical trade there. Stunning. Beautiful, guys. Almost to 50. And we still got runners, so I trimmed half of my Nvidia puts there. 207.50s green. That was a member live trade. Put that in there. Hopefully you guys are able to bank with us. What's funny is the market is still holding. IWM still squeezing. Look at that. IWM new high of day. My next trim level, guys, on Nvidia. Oh, Nvidia dumping here. Right into that pre-market low. Chop us down. Oh, our puts are screaming higher here, guys. Let's go. Almost pushing 60% on these Nvidia 207.50s. Let's go. Drop it lower. Holy moly. We're up 60%, guys, on Nvidia. Banger. That is a banger of a trade, guys. Money has been made. I'm just going to leave these running. See if we can get a nastier little breakdown. Semis are definitely coming in right now. Hard and heavy. QQQ. Starting to see some selling. Nice trade if you caught that with us. Gold even selling. Dollar still weak. Crude oil trying to firm up. SPY, IWM are still holding quite steady. But wow, between AMD and NVIDIA, they cracked hard. Cracked really hard. I wouldn't touch AMD 250s, honestly. I mean, maybe you get a bounce, but AMD looks like it wants that gap fill, and usually a lot of liquidity is sitting right at the gap. People are waiting to buy it, and they usually pierce it. But AMD could be putting in this M top on the hourly chart. You just got to be careful with it. It's still very expensive. Obviously, it's a darling of Wall Street, so naturally we'll get a big buy the dip. But if you're wanting to trade it long, I mean, wait for this 10-minute EMA. That's the only area that I see it bouncing off of. You know, it would pierce the gap. It would overshoot the gap a bit. But that 10-minute EMA would be somewhat of a level. Your Trump coin shorts are up 50% past 2 hours. Let's go. Nice job. Yeah, we just made about 50% on NVIDIA puts. 207.50 puts that I sent out this morning, printed. And we still have runners. And we still have time. Nothing like being in the driver's seat of the trade. And NVIDIA is still up 3% on the session. Imagine they take NVIDIA negative today. That would be a nasty volume. You got quite a bit of volume on NVIDIA today, guys, already. It's only 1150, so you're trading 165 million shares. You double that, you're going to be probably well over 300 mil on shares today. What did you trade yesterday? There's a nasty glare. You traded yesterday 297. So there's probably going to be more volume on NVIDIA today than anything else, guys. So this could be a bit of a high volume reversal. NVIDIA dumping. NVIDIA dumping, guys. Look at those puts. They are juicy. 65% gain. Pay us. Pay us. Gold dumping. Oh, I'd love to get 100% on these contracts. All right, guys, good job. I'm going to jump back on off the mic here. I just had to send out that little alert to take profits there on NVIDIA. Now the trade is pretty much risk-free, so good job taking first trim. Stop loss at break even. I repeat, stop loss at break even on these NVIDIA puts, but 48% gain. Nice job. Again, my next level I would consider trimming is TP2. I'd probably trim another couple contracts and then leave the one running, but nice job. All right, we'll see you back in a bit, guys. If anything changes, I'll let you know. All right, guys, market is still imploding here. NVIDIA puts are printing, guys. NVIDIA puts are absolutely printing. We are coming into TP target 2. Again, TP target 2. NVIDIA puts are ripping. Come on, baby. Print it. Print us. Look at that fall in NVIDIA, guys. Beautiful. Are they going to take NVIDIA negative here ahead of Fed meeting? This is kind of what you want to see, is a nice sell in the market in semiconductors. Look at that dump. Almost up 100% on NVIDIA 20750s. Come on, NVIDIA, keep going. Keep going. Wow, your gap fill is not that far away. Let me flip back to that regular trading hours. You can see your gap fill on NVIDIA is all the way down here. Let me just erase some of this. Oh, NVIDIA's knifing, guys. Our puts are paying. Thank you very much. There is some support here. It's your pre-market low. But that's a full nasty breakdown. Look at AMD, guys. AMD has now gone negative. Things are getting nasty. AMD's filled the gap. Yeah, it might fill the gap. But again, on the short side of NVIDIA, you typically want to take your profits where they're due, right? You got your pre-market gap fill coming up here on NVIDIA. So this is its pre-market gap up. There will be some support there. That's where I think we can get to. I'm actually going to hold these a little bit more. I want 100% on NVIDIA, guys. I want these contracts to hit between 620 and 630, and then I'll look to take some more profits. I want 100% on the short side. You're getting a little bit of a bounce. Come on, we're almost there. Come on, 207.50 puts are ripping. Let's go. I literally quickly went to make some lunch, come back, perfect decline on NVIDIA. Wow, look at this move. Pay us, pay us, pay us. Huge trade, guys. Amazing trade there on NVIDIA, guys, if you caught that with us. Come on. Technically, we should be taking profits here, but I'm going to be a little bit greedy. AMD did the good old gap and crack. Still have your S&P 500 trying to defend its gap. But what a dump into pre-market low there on NVIDIA. That was filthy, guys. The volume today on NVIDIA is going to be insane. Insane, guys. We haven't even got to the FOMC volatility yet. Nastiness. So huge NVIDIA gains there, guys. Please hit that like button. That was a top short idea we called out. It was a private alert I sent out to the group, which specific strike, but we're almost pushing 100%. Come on. Knife it into that. Let's test it. So there's two gap fills, guys. There's the pre-market gap from last night, and then there's your regular trading session gap around that 200 level. So there's two major gaps that I'm watching on this NVIDIA. Yeah, NVIDIA might hit that gap. Thanks, Ram. Thank you, Ram. Yeah, that NVIDIA was a banger, guys. AMD getting a nice bounce off of its prior day. So notice how the bounce in S&P is starting to get bigger than NVIDIA. It's telling us that there are some institutions unloading. Big boys are selling. You know, it hit 5 trillion. I personally don't think NVIDIA should be up. I'm on the NVIDIA 10-minute chart. 5-minute chart getting a little bit of a bounce. 3-minute chart getting a little bit of a bounce here. But I keep it on the 10-minute chart. It's a hard candle down. One could argue there's a little bit of a bearish formation that's triggered on Nvidia, and it could take you down to intraday pre-market too. So it could take you down to, call it 202.40. You know, if you look at AMD, guys, which is actually still a heavier weighting than Nvidia in your stocks, look at AMD. AMD did the full gap and crack down into prior day low. Imagine if Nvidia retests that. Obviously, there's big bounces in the world's largest company. That's just the structure of it. But Nvidia is trading some pretty thick volume today. Pretty thick. So just keep that in mind. Heavy volume, reversal at the highs. Keep that in mind. Again, there is some support here, which is why I have TP2 there. Pre-market low. There is some support, but I do fancy a break through that level. Maybe you get a bounce and then a break, but I'm expecting them to still sell through that. Come on, Nvidia. Here we go. Come on, give me another hard candle down, Nvidia. Heavy volume. AMD's bouncing though, so that's going to be helpful for Nvidia. Crude oil bouncing, gold trying to recapture 4K. Nvidia. Keep it going. My average on these 207.50 puts is 313. 313. Right now they're trading at around 580, 590, $6. Warning 100%. Come on, give it to me. Should have full ported. Who said full port Nvidia short? I think it was anonymous. Around the stream. Damn. Could have been a double on the portfolio. Can't be greedy. Can't be greedy. All right, come on. One more little knife into this pre-market gap. I think that they're going to see this pre-market gap. It's quite odd to see a pre-market gap like this. Very weird. You don't typically see that often, a pre-market gap like that, especially on a company like this. Well, you're still up nicely, 200 shares. You know, if you pick near the highs, you know, say 200 shares times. I only went in with 6 contracts myself. It wasn't that big. Have you taken any profits yet? Have you taken any profits on your common shares short there, Anonymous? Or are you going to close them all at 200.35? Ignacy. Let's see what else is going on here. Yeah, yesterday's move was not logical. I know. Nice, you're holding. Good stuff. Make that profit. Make that profit. Coming. Nvidia looking like it's trying to go through its next wave of selling. What's interesting is it seems that the sell side liquidity in Nvidia is actually not leaving the market outright. It's kind of flowing into your small cap stocks. So that's somewhat of a healthy sign to see. Nvidia is kind of like the piggy bank right now of IWM. That's at least what I'm observing. I'm still in my put options on Nvidia looking for at least this pre-market gap to be filled, or even better yet, prior day high. I'd love to see them trigger this bit of an intraday bear flag and take us down to the next support area. Come on, Nvidia. I want 100%, guys. So again, once contracts get above that 620 area, I'll start to consider pulling out some more profits. But for now, the 207.50s, we're deep in the money, sitting pretty, and we wait. Microsoft still down 0.65, Nvidia up 2.3, but well off the highs. Google still ripping up 1.7, Tesla down 0.36, Meta down 0.17, and Apple just flat to negative. Bitcoin and crypto have sold off pretty sharply, down 1.5% on Bitcoin. I think Bitcoin is into an interesting area. If it wasn't FOMC day, I'd be buying Bitcoin right here, right now, for a little bit of that 7 and 20 bullish crossover continuation. But that's pretty much done exactly what is to be expected. We discussed BTC, how it's triggered a bullish intraday formation. You've done the 7 and 20 crossover, and now you're getting that back test. So this is technically a little bit of a buy area, but obviously it's risky. It can overshoot with FOMC. We'll see if that S&P 500 can hold. So far, it's actually holding up quite resilient. Retesting this point of control volume shelf. Again, for FOMC, I'm kind of considering taking two sides of the trade. I'm kind of thinking of taking 690. I was looking at 692, 693 calls, 0 DT, of course. So I was looking at taking 692 calls, but simultaneously taking 679 puts. I think if we get a big directional move, the bigger move comes to the downside. But obviously there is still that little bit of upside potential based off of this S&P 500 pattern that I'm watching. So we'll see. Not looking, I'll probably take something before the Fed, but as always, I mean, trading Fed is risky. Don't go in with anything you can't afford to lose. There's obviously a better trade setup when you get the reaction, but I might enter a little bit of something beforehand. Seems to be a decision. We all know it's going to be a quarter basis point cut. Right now, bit of profit taking. This could be the little bit of a liquidity grab. I think this is the initial dump. You likely will see an initial pop, and then I think you get another dump. So dump, pump, and then another dump. I have put in protective stops in place for my NVIDIA puts, locking in gains no matter what. Again, protective stops are in place for my NVIDIA. I've got about a 60% hard stop in place for NVIDIA. We're up more than that on the trade right now. Nice to see this Bloom Energy seeing a little bit of sell side pressure. Again, one of the heaviest weightings in the IWM. So that's one of the reasons the IWM has been super duper strong. Hence, Bloom Energy has been strong. Still riding some Lotto 120s. I think into the Fed meeting, guys, with this little bit of a dip in SPY, I'm looking at taking two sides of the trade. Again, I'm looking at 692 calls, maybe 693 zeros, and I'm also looking at 679 puts. Remember, just remember that you kind of want to take your profits on these very quickly, as there's a lot of IV priced into pretty much all the contracts right now, unless you're going way out. But any of the short dated contracts have a lot of IV. So if you get that big directional move, that typically is when you need to trim and take some profits, because once that IV starts to get crushed, those contracts could lose value quickly. So just keep that in mind. Always keep in mind your position sizing. Please don't get blown out if you're going to risk your whole portfolio. That is not risk management. But the bigger play usually is waiting, guys. Front running a direction is always dangerous. Obviously, we all want to be ahead of the crowd, but typically the best bet on FOMC is to wait for Powell. You know, you're going to get a little bit of a pop, likely off of the interest rate cut. Usually there's a pop on interest rate cut. And then the bigger move, so you get that first initial move, that first initial volume spike, and then the bigger spike is at 2:30. So 2 o'clock, a little bit of volume, 2:30, that's your bigger play. So the best play usually in most situations is if you drop, you buy it up. Counter trending is usually the best strategy on FOMC. If they pop it, you usually fade that move. But you kind of want to get in and get out. You know, again, this would be a lotto. This bear target down here would be an absolute lotto. Same thing with this bull target. Both are lottos. These targets are lottos. You know, if you got a drop, say the PDL, you would likely need to take your profits and run. If you got a spike up to about 690, you would likely need to take your profits and run. So just keep that in mind, guys. Just keep that in mind. 136. All right, I'm gonna look at some spreads here, see what's going on. Also looking at these here. Hey, Juve winning 1-0. Dusan Vlahovic, penalty shot. Again, I have a hard stop in place protecting my gains on NVIDIA. Up 60% on my runners again. Anybody taking anything ahead of this? Anybody in already anything? Upside, downside? What are you guys doing? Yeah, it should be pretty interesting, guys. These are the volatile moments you make for. It's basically zero to hero. Peter, let's see what Peter's saying. Peter's in something. I hedged with some 3x ETFs like SPXS, SQQ, and SOXS. Nicely done, Peter. Good luck. I hope you're right. Again, I still got some lottos in place on, well, not really lottos, we've taken them, but Nvidia. I'm still riding my puts, but protective hard stop in place. Looking for it to dump down into this pre-market gap fill level. So again, guys, the 2 p.m. you'll get a little bit of a likely volatile volume pop, maybe a drop. But 2:30 press conference, Jerome Powell, I will be streaming it live, the background audio at least. Yeah, so we get 8 minutes, we get the FOMC rate decision. Market is pricing in a 0.25% cut, quarter basis point cut. Just a heads up, my Nvidia stop was tagged. 60% gain, locked it in. 60% gain, I repeat, locked it in. I'm going to pull up the indices here. We'll watch the IWM and we'll watch obviously the S&P 500. So locked in gains there, guys. Interestingly enough, guys, interest rates have been quietly climbing here, just like what I said in the morning. Don't be surprised if yields actually have a little bit of an uptick into this rate decision. And you look at the 2-year yield, it's been quietly climbing higher and higher here. Again, so this is the smaller move that is going to take place. Yeah, careful in the first move, absolutely. This is the smaller move that takes place in the market. 6 minutes will have the quarter basis point cut. The bigger move comes with Powell. So typically, if you get a pop, that move will get faded a little bit. If you get a drop, usually it gets bought up a little bit. There's an aggressive buy zone kind of right in the 686 area. And then really kind of any short above the 690 zone is not a bad area to fade. Again, this is a smaller move that is expected. Guys, 4 minutes till the rate cut. 4 minutes till the rate cut. A little bit of increase in volatility is expected. Again, whichever way it is, I'm looking at this first initial dip. If we get a big enough dip, I'll long it off the 680, 650 area. If we get a pop, I'll look to fade it. But this move is generally a little bit smaller than the press conference. So just keep that in mind. It's usually a little bit smaller. Let's get ready to rumble. Here we go. All right, 3 minutes, guys. So we're going into this. We got gold up 1%, Dixie slightly green, 10-year yield up 0.8, 2-year yield up 0.8, VIX slightly negative, Bitcoin down 1%, SPY up 0.13, QQQ outperforming SPY, that's up 0.3. The IWM is outperforming all of the major indices, up 0.57. Microsoft down 0.58, Amazon green by 0.26%, Nvidia still ripping and roaring, up 3.16%, Apple up 0.58, Google up 1.9, ripping, Meta under a little bit of pressure, that is down 0.46, Tesla slightly green, JP Morgan slightly green, up 0.2, Netflix down by 0.25. So you got a little bit of mixed price action across the board. If we pop to the high, I'm going to look at some 0 DTE put options here. I don't know if we're going to pop off of the interest rate to the high, maybe, but the bigger move generally happens at 2:30 with Powell. We'll see what type of a move we get off of this interest rate decision. Well, we don't know. He's not on. We don't know if it's purple or gray. I'm betting it's purple. It's usually purple. But 2:30 he walks on stage. Here we go, guys. 20 seconds till the rate decision. Quarter basis point cut. Federal Reserve cuts rates. You heard it here first. Let's just see what the market does here. Here, little bit of wicks. They are trying to dump the market a touch. Volume coming in. Federal Reserve lowers rates. So Fed cuts rates by a quarter basis point. If we sweep this all-time high, guys, I'm going to look to fade it. If we sweep this gap fill down here, I'm going to look to long it. That's the first play within the next half an hour. I want to see that hit pretty quickly. I think they're kind of sweeping both sides of the trade right now. Running shorts. They're probably going to try to run the stops on the downside as well. We'll see. IWM ripping, Nvidia softening. Markets are so far steady. 2 and 10-year yield have spiked up a little bit. Your dollar has also spiked up a little bit, guys. Gold is dumping hard, so gold saw a pretty big down move there. Gold might be a bit of a 0 DTE. Well, not a 0 DTE, but gold might also be a bit of a lotto long here. Buying into this dip. It's probably be rewarded. Microsoft still under pressure. Nvidia softening a touch here. SPY just in no man's land. Again, this is just the initial move. Getting rejected off of prior day high so far. Cabin saying markets are going to rip. Yeah, you got a nice W formation trying to hold. Hasn't broken out yet, but it could easily rip. Again, this is the small initial volume move. The bigger move still comes at 2:30 with the press conference. Gold getting gobbled up here. Gold reversing its entire move. IWM is starting to rip. Gold's starting to firm up even more now, guys. Gold's seeing a massive reversal back to the high side. So gold did a real big running of the stops, stopped out a lot of people. Take a look at that big reversal on gold. Ran the stops, ripping it right back up. So gold is starting to rip. IWM is softening a little bit here, guys. Your Russell's starting to come in. SPY has pretty much gone nowhere. You've ran the shorts, and now you're starting to drop here, guys. All right, so this is getting a little bit more interesting now. Now we're getting a little bit of a potential trade here. If we can fall down to the 686.50 zone, I'd look to enter some calls. But you can see they ran the stops on the shorts. Now they're running the stops here on the longs. And we're probably going to go nowhere. The bigger move will be with Powell, just roping in liquidity on both sides of the trade. Very tough for humans to trade this, guys. You have to be a fucking super scalper. This is all your algorithmic boom trading going on right now. Again, it's making people chase. They want people to chase, right? Your Russell getting rejected pretty hard there. Really how to trade this is you got to have your limit buys ready. You slap the market order and you're getting wrecked. You will get wrecked if you're slapping the market order in this chop here. We've gone pretty much nowhere. You got to set those limit orders. Quantum stocks still holding quite steady. eVTOL stocks, energy stocks are holding steady. Gold making a nice little reversal. Bitcoin still down 1%. All right, we've gone nowhere on SPY, guys. Absolutely nowhere. Which is okay with me. That's fine with me. I'm a patient man. Let's see what these puts are worth. Now, so some IV has fallen out of these contracts, but there's still quite a bit of IV. All right, your IWM is seeing quite a bit more selling. Your dollar's firming up. Yields are softening now just a touch. Bitcoin's still falling. Here goes SPY. SPY's starting to sell. Uh-oh. Uh-oh. I wouldn't mind scalping it on the long side. Give us a fall. Give us a fall, SPY. A little bit of a bearish breakdown heading into the picture here, guys. Gold now reversing yet again. So not the healthiest so far. SPY still holding structure though. Again, markets are wicking around, guys. Wicking around. Chopping people up and out. Main indices are wicky. They are getting wicky with it. All right, so it's pretty usual price movement that we're observing right now, guys. Kind of chopping around both on the long and the short side, stopping people up and out, but really going nowhere since the rate decision come out, and that's to be expected. That's usually what happens. So we're still waiting on Mr. Jerome, J Powell, Papa Powell, Money Printer Go Burr. Again, we still have some crazy lotto targets, guys. Your bull target lies all the way up here. Your bear target lies all the way down here. SPY trying to make a little bit of a push now. IWM bouncing. The NVIDIA bouncing. Ugh, sleepy price action. Not giving. Where's the volatility? Give it to us. 22 minutes, guys. 22 minutes. Whole lot of chop and slop, right? Up move, down move, back to basically where we were. What targets do I have for IWM? IWM, if it gets a pump, you're going to probably head to 253, 253.50. You know, around somewhere around this, just appears to that high. If it's a bullish pump. If you fall, then I could see it going down to 245, 244, around that area. It's hourly chart, 4-hour chart support, so. Amazon back to the negative side. BTC really taking it on the chin right now. Bitcoin definitely struggling in the very short term. So it's a pretty decent sized initial volatility range. I mean, the range is about $1.55-ish, $1.56 on the top and bottom wicks. So usually it's, 2 to 3x that move. You could easily see sometimes 4 or 5x. So again, just remember the bigger move is going to come here. So far we've seen a $1.56 range. You put a $1.56 on either side, you're looking at SPY around 690 and basically or SPY around 685. So you're still kind of chopping in no man's land, and this is assuming that it's kind of the same volatility range that we just had. Usually it's bigger than that. Usually it could be double, guys, to if not triple. So we'll see. Just understand, be patient, be patient. We will likely get a trade at some point. Again, I'm looking at fading a pop or longing a drop for a quick liquidity bounce or quick liquidity pullback. I've also told members what the bigger trade is. If we hit some key levels, I put the little alert in the chat, but for today, I'm just looking at scalping some 0 DTEs if I get that opportunity. Sell side pressure. You do have your dollar, guys. Dixie is rocketing here. Your US dollar index is seeing quite a fat move to the upside. Quite interesting. Yields are still up. Roping retail in right now. Yeah, they're trying to load people up on both sides, right? They tried breaking it out. People thought there was going to be a breakout. They slap it back down. Now people think there's going to be a bearish breakdown, and it could. It could easily break down, specifically with that US dollar, but there's still going to be a bigger move on Powell. I'm really hoping they pop it up for a little bit of a sweep, as I'm more biased on the short side. But look at this, they're starting to drop it. All right, I got to switch my things to calls now, as I got to prepare for call action. Bitcoin right now testing 111.13, gold under 4, 2-year yield up 3.52. IWM trying to sell off here. Yeah, XLP's cooked. Like I said earlier, there was a lot of selling under the hood of this market. We did that RSP SPY comparison, and SPY was green, RSP was deeply negative, so there's quite a big divergence across the board, guys. Roma. Look at this move. It's tempting me to go long onto Powell. You're tempting me, Powell. Tempting me to go long. I should wait. I should be patient. Should I take some lottos into Powell in case we get a Powell pump? I'm just nervous he knifes us. Nope, they're probably gonna rip us back up. Maybe I'll take some lottos into Powell. Come on, give us one more little dip here. What are the 689 calls like? $1.46. How about the 690s? 690 SPY call at $1.08. Still pretty expensive right now. Lots of IV still priced in. Lots of IV still priced in. That could have been the little dip ahead of Powell. 13 minutes till showtime. 13 minutes till showtime. Ladies and gentlemen, pimps and players, they are chopping people up and around. That's what FOMC is, guys. It's kind of counter trend trading at its finest. It's tough to really do anything else. Come on, why did Barks take that out? Still just chopping around here, guys. Craziness. Does look like they want to give Papa Powell another pump. Crude is still strong. Gold's still up 0.85 but fallen. Markets are still just gone nowhere, guys. We've really gone nowhere. Excuse me. Well, we got the 25 basis point, but definitely energy sells at a steep speed when it's sorry, you're looking at, I didn't see the R. XLRE. Yeah, XLRE's had some weak earnings from a few different real estate companies, and then you have the home builders showing weakness. Ten minutes till Papa Foul. So guys, coming in hard. Hard and heavy. IWM going back to baseline negative. Yeah, so they're keeping mega caps pinned because they right now people are trying to front run the move, right? Through this this elevated IV, market makers are going to pin stocks right ahead of the move, right? And as soon as that initial direction happens, that's when that IV starts to unravel. But by come like 235, 240, that's where a lot of that IV just gets crushed, depending on which direction it goes. You're going to see stocks unravel. So we'll see. So far, market's selling pretty hard right now. I'm hoping for a pop. Don't know if we'll get it. One can hope, though. One can certainly hope. Again, if we dump, guys, I'm going to take a Lotto 690 SPY call. 6 minutes here till... Again, my Lotto will be a 690 SPY call. If we pump, I'll look to short. I'll probably take a 686.0 DTE. So I'm looking at fading the initial reaction. Whether it's a pop, I'll look to short. If it's a dip, I'll look to long. We will have Jerome Powell in the background. Let me start queuing that up. You guys can hear that background music. That's just the Fed. We're waiting 5 minutes. Purple tie. My bet is purple. We got a 50-50 toss-up pretty much. 45% people say close negative, dump. 55% of the polls say close positive, pump. Interesting. I'm going to end that poll right here. But a little bit of a toss-up in the poll. Quite cool. That's telling us we're going to get a fat move. We are going to get a fat move. IWM, guys, ripping to the downside. Yikes. Instead of 690 calls, guys, if we dip, I'm going to take 689s. If we dip. Again, sized for heavy loss. This is very volatile. 3 minutes till showtime. I'm sorry, JP. Didn't give you a third option. All right, guys, 2 minutes, 2 minutes. Papa Pow, let's go, let's go, let's go. Buckle up. Buckle up. The fact that we've sold off, it seems like they're going to pump us. I don't know, that's just my guess. And then I really hope they pump us to get us a really good short entry. Come on. Yeah, it looks hella trappy. This whole market is a trap. I tell you, it looks hella trappy today. But we're here. We're trying to make some money. It looks really, really trappy here, guys. All right. We've got 36 seconds. 36 seconds, guys. Market coming back into that range that it was just trading into. They're chopping people up and around, guys. The big move is coming right now. A minute or so. Powell is set to come on stage. Powell is set to come on stage. You guys can hear the background music. Jerome Powell will be speaking. I will be playing it live. Please hit that like button if you haven't already. We got some crazy volatility here, guys. Jerome is going to be walking out here any moment. What color tie is it? Purple tie. Purple tie, guys. We gonna pop. Purple pop.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although some important federal government data have been delayed due to the shutdown, the public and private sector data that have remained available suggests that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer trajectory than expected, primarily reflecting stronger consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by 1/4 percentage point to 3 3/4 to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy
Here we go.
based on the incoming data, the evolving outlook.
Look at that, guys. All right, I'm closing my puts,
We continue to
682s.
face two-sided
Holy
risks.
shit. Closed them at $1.05,
In the
guys.
committee's
Closed
discussions
at
this meeting,
$1.05.
There were strongly differing
Look at
views
that.
about how to proceed in December.
Look at that drop.
A further reduction in the policy rate at the December
Let's
meeting
go.
is not a foregone conclusion.
Let's frickin' go.
Far from it.
That's what I'm talking
Policy
about.
is not on a preset course.
That's what I'm talking about. Let's
At today's meeting,
go.
the committee also decided to
Boom.
conclude the
Huge
reduction of our
100%,
aggregate
120%
securities
gain
holdings as of
just
December
right
1.
there. That is
Our
filthy, guys.
long-stated plan has been
Filthy.
to stop balance sheet runoff when reserves are somewhat above the level we
Look
judge
at that
consistent with
dump.
ample reserve conditions.
Let's go.
Signs have clearly emerged that we have reached that standard.
Let's go. Zero
In money
DTEs,
markets,
guys. I
repo rates
closed
have
my
moved up relative to our
682s in
administered
profit.
rates, and we have seen more notable pressures on selected dates, along with more use of our standard
Let's
repo facility.
go.
In addition, the effective federal funds rate has begun to move up.
All right, guys.
relative
I'm
to the rate of
taking
interest
profits on my
reserve yields.
members. I'm going to take one
developments
contract
are
off
what
the
we
table,
expected to
let the
see
rest ride
as the
into
size of our
tomorrow.
balance sheet declined
That member trade,
and warrant today's decision
you should
to
get a
cease
fat
runoff.
bounce at some point.
Over the 3.5 years,
Look
that
at
we've been
this
shrinking our
market.
balance
Here we
sheet,
go.
Our securities holdings have declined by $2.2 trillion. As a share of nominal GDP,
Dump it.
our balance
Dump
sheet has
it.
fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities such as
go.
currency keep growing.
That's what I'm talking about.
We will
Baby,
continue to allow agency
pay
securities
us.
to run off our balance sheet, and we'll
That's what I'm
reinvest
talking
the
about.
proceeds
Nvidia
from
coming in,
those
Bitcoin
securities
wreck,
in
dollar
treasury
just
bills,
got
furthering
pushed.
progress toward a portfolio consisting primarily
Let's
of treasury
go.
securities. This reinvestment
We entered
strategy will
those
also help move the
682
weighted average
zero
maturity of our
DTEs at
portfolio
44 cents,
closer
guys.
to that of the outstanding stock of treasury
44
securities,
cents.
thus furthering
Right
the
ahead. I
normalization
also
of the
sent out a
composition
member alert.
of our balance sheet.
Right ahead of that.
The Fed has been assigned
Beautiful
two
dump.
goals for monetary policy.
Contracts
maximum
are
employment and
ripping.
stable prices. We remain committed. to
Huge
supporting
100% move just
maximum
right
employment,
there
bringing our
on
inflation
both sets
sustainably
of
to our 2%
trades
goal
that we
and
took.
keeping longer-term
Boom,
inflation
let's
expectations
get it.
well anchored. Our
Printing.
success in delivering on these goals matters to all Americans.
All right, now we look for
We
a bit of a
understand that our
spike
actions affect
higher here,
communities,
guys.
families, and businesses across the
Not
country.
interested in that long. We have
Everything we
violated
do
some
is in
key
service to
levels,
our
but we
public
could get a
mission.
bit of a
We at the
bounce
Fed will do
here.
everything we can to achieve our maximum employment and price stability goals.
That was
Thank
crazy.
you. I look forward
That was
to
a nasty
your
dump.
questions.
Let's go, let's go, let's go. Let's go.
Nick Timmeros of the Wall Street Journal. Chair Powell, are you uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion at your next meeting?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting.
Damn,
is
the
not a
calls
foregone
are
conclusion, as I
expensive
just
right
said.
now.
So,
Super
I would
expensive.
say that needs to be taken on board. We had, I would just say this, 19 participants on the committee.
Wow, those calls are
Everyone
expensive,
works very
guys. They're
hard.
gonna
This
drop
takes the
this market, I
public
think.
interest to serve the American people very
Some
seriously.
more.
And at a time when we have tension between our two goals.
Screenshot cabin,
we have,
spike time.
Strong views
We'll see.
across the committee. And as I
Certainly
mentioned,
there is some support,
there were
which is
strongly
why I've
different
taken
views.
profits.
And,
But
the
yield
takeaway from
spike,
that
dollar
is that
spike.
We haven't made a decision about December, and, we're going to be looking at the data that we have, how that affects the outlook and the balance of risks, and I'll just say that.
You and some of your colleagues have framed last month and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook? Or could this unfold along the lines of last year, where you made a sequence of adjustments and
Boom,
waited
guys.
to gather more
Stunning.
information?
Took
So,
profits on my
we
678 puts, guys. Members
have been
took
thinking-
full
way I've been
profits.
thinking about it is,
Huge gain. Also,
the-
those zero
the risks to the
DTEs.
two goals
Stunning
for a
trading,
very long
guys.
time, the risk
That's
was
how we
clearly
do
of
it.
higher inflation.
That
And
is
then
how
that
we
has
do
changed
it.
now. And as we saw
Let's go.
particularly after we saw, after the
Boom,
July meeting,
boom.
we saw
Stunning.
downward
We
revisions
entered
of
the
job
678
creation.
puts at
We saw a very
78
different
cents,
picture of the
guys.
labor market, and suggested that there were
Just trimmed at
higher downside risks to the
$1.42.
labor market than we had thought, and that suggested that policy, which we had been holding at a I would say modestly, others people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
Claire.
I'm Claire Jones, Financial Times. Thank you for taking this question.
Amazing.
We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought up. Was there any consideration, for instance, of the investment we're seeing in AI and some of the generation of household wealth through rises in stock prices?
2 for 2, guys. My money's been made. Let this market fall.
You know, I
This
wouldn't
is
say
a
that's-
mass
that's a
violation.
factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody. I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment.
Bang, bang.
We have one
Market
tool.
up.
You can't do both of those. You can't address both of those. at
Huge,
once. You've got a
huge
very
gains
different
there, guys.
situation. So
Huge gains.
you have some people.
Nice
people have
little
different
lottos.
forecasts, right? So
140% gain on the
they'll-
zero
they'll feel-
DTE
they'll
682s
forecast
that were
faster
called
or slower
out
progress on
pretty much
margin.
right off that
And they also
volume
have
shelf.
different levels of risk aversion.
Members got
And,
the
people-
678 SPY put for
some will be
tomorrow
more averse
that I
to
took 120%
inflation
gain on.
overruns, and some will be more
Thank you
averse
very
to
much. Pleasure doing
underruns of
business with
employment.
you all.
And so you put that together.
Banger.
And as you can see from the S&P
SPY's
and from
probably
the
gonna
public
only
discussion that
bounce
goes
once
on
we get
between
into
the
this
meetings
gap
when-
window, guys. Just
when the
understand that.
participants go out and talk. They're very disparate views. And they were
Huge
reflected
mover,
in
guys.
strongly differing
It's looking like a
views in
short to
today's
pop.
meeting,
There will be a
as I pointed
bounce,
out
but
in
this
my
is a
remarks.
nasty
And
fall.
that's what leads me to say
Fucking downright
that,
dirty,
you know,
man.
that
Oh,
we haven't made a
downright
decision
dirty.
about
That is
about
filthy.
December. You know, I
Dollar
always say
just
that. It's a fact that
ridiculously
we don't
spiked
make
higher
decisions in advance.
yields.
But this is, I'm saying something in addition here, is that it's not to
Haven't
be
even
seen
got
as
to
a
the
foregone
Q&A
conclusion.
yet.
In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the US Treasury issuing more short-term debt?
That could be one of the factors, but the reality is we've seen, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at,
Trimming my November
place we're trying to reach.
682
What
SPY
we said
puts, trimming
for a
half
long
of my
time ago is that
November
when we,
682 SPY
feel like
puts.
we're a little bit,
I repeat,
a bit above
trimmed half,
what we
682.
consider a level that's ample. that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last,
That was
call it
another little
3
beautiful
weeks or
gain,
so,
guys.
we've
November
seen
7th,
more
682
significant
SPY
tightening, and I think
puts
a
in the
clear
options group.
assessment that
Trimmed
that we're
half.
at that place. The other
Let's
thing is,
get it.
you know, we're the balance
From
sheet is shrinking at
379
a
to
very, very slow pace
574.
now. We've reduced it by
Still have half the
twice.
position running.
And so there's not.
I'll monitor
a
that
lot
with
of
a break-even
benefit
stop.
To be, you know, to be holding
This
on
looks
to
like a
get the
short to
last
pop,
few
guys.
dollars
This looks like a
because,
short to
you know,
pop.
Again, with the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, you know, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be, you know, freezing the size of the balance sheet. And the December 1 date gives the markets a little bit of time to adapt.
Colby. Thank you. Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, you know, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the
thank you.
possibility of second round effects from tariffs?
Yeah, I mean,
You
in
accidentally
principle,
bought
if
RKT, there
you
goes your
receive
bags.
data that
Uh-oh.
suggested that
Thank
the
you,
market
guys. Sorry for us.
strengthening or even
Appreciate that.
Stabilizing.
Again,
You know,
this
that would
market is
certainly
in trouble,
play into
guys.
our decisions
We're in
going
some
forward.
real heavy trouble
So,
right
and we do
now.
have, you know, we get some data.
look at that
The labor market
SPX
is a place
chart,
where we get,
just to
for
show you where we're
example, we
trading,
get
right?
State-level data on
Clinical.
initial claims, which are
Look at that
sending a sort of
confluence of
signal
trend lines.
More of the same. We also get, you know, job
Nasty
openings,
little
and
resistance
we'll get
zone.
lots of survey data. We'll get the beige book and things like
This
that. So we'll
market,
have a-
remember, my
we'll have a
bear target
picture
is
of what's going on in the
679,
labor
guys. I
market.
think we could still head
And, you know,
down
the
to.
fact that
I'm going to try some
we're
lotto
not seeing
puts,
an
guys.
uptick
0
in
DTE,
claims or a
679s.
downtick really in openings.
That's risky, but I'm
suggests
full
that
of
you're
profits
seeing
today.
maybe
All right, I'm in
continued very
679
gradual
SPY
cooling,
puts,
but nothing
lottos,
more than that. So that
53
does give you
cents,
some
lotto.
comfort.
2
But
contracts
if this shutdown
only.
lasts a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Yeah. So,
Let's
you
see
know,
if this
we'll-
bear target comes into play,
we
guys.
get-
Again,
I
lotto.
mentioned what we get in the labor area. We get some data in inflation, some data in economic activity. And we'll have a picture of what's going on. We also will have the beige book again. I would say we're not going to be able to have the, you know, the detailed feel of things. But I think if there were a significant or material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect December, it's really hard to say. December's, you know, the meeting's, I guess, 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then, you know, that could be an argument in favor of caution about moving. But we'll have to see how it unfolds.
Steve.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views. Was this a close call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had 2 dissents, one for 50 and one for no cut. So, you know, that was a strong, solid vote. In
I
favor
think
of
we
this.
sell off because they want to
Because
probably
the
pump the market
strongly,
back up on mega cap tech earnings.
differing views
Mega cap
were
tech
really
usually saves
about
the market. They
the
like to
future,
give
what does
all
that
the
look like?
glory
And I
to
think
your
people
tech
are
stocks.
saying, you know, they're noticing stronger economic activity. You know, forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, you know, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's a.
Come on, new
you
lows.
read the SEP, you read the speeches, you know there are differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance sheet, if you stop it, the runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration. So that's what, in the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long. But at a certain point, you'll want to start reserves to start gradually growing to keep up with, the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be, right now, it's got a lot more duration than the outstanding universe of Treasury securities. And we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding Treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's the direction of things.
Janelle.
Janelle Marte with Bloomberg. How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So the September CPI report, we didn't get PPI after that, which is important
Big
for
push.
translation into what we look at, which is PCE inflation. But we can still make a pretty good assessment of what that will be. When we get PPI, there might be some adjustments. But so directionally, it was a little softer than expected, and we always break it down into the three components. So basically, you've seen goods prices increasing, and that's really due to tariffs. And that's compared to a longer
Dollar
run trend,
softening.
very, very mild deflation in goods. So that's moving inflation up. On the other side of that, good news that housing services inflation has been coming down and is expected to continue to come down. So if you remember a couple of years ago, that's the one that we kept expecting it to do that. Now it's been doing that for some time, and we expect to continue that. That leaves the biggest category is services other than housing services. And that's kind of been moving sideways over the last few months, but a significant part of that is non-market services, and we don't take a lot of signal about the tightness of the economy from that. So if you add all that up, a couple things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We estimate, people have different estimates of what that is, but it might be, 5 or 6 tenths, and so that, if it's 2.8, then core PCE, not including tariffs, might be 2.3 or 2.4 in that range, something like that. So that's not so far from your goal. So that we look at that, and the thing about tariff inflation is the base case is that it will come, and it probably will increase further, but it is that it will be a one-time increase. And we've been very focused for all of this year at making sure that that's the case and thinking carefully about what are the pathways through which it could become something else, troublesome inflation. One of those would be, a really tight labor market. We don't see that. Another could be inflation expectations moving. We don't see that. So I think, we're watching this very carefully. I think it's not the case that we're just assuming that it's going to be a one-time inflation. We understand fully that this is a risk we have to monitor and ultimately manage.
With the stubborn in services inflation, what are some of the things that the Fed could do to address that, especially when we're seeing potentially labor supply challenges?
Sorry, say the first.
The stubborn services inflation that you mentioned.
Services inflation, yeah. Well, again, the part of services inflation that is, that isn't coming down as we would like it to is the non-market part of non-housing services. And, overall, that's just something that we expect will come down. The non-market part of it should come down. It largely reflects higher stock prices and financial services that are imputed rather than actually paid is a big part of that. But also just, we think policy is still modestly restrictive in my telling. And so that's the kind of thing that should lead to a gradually cooling economy. That's one of the reasons you see a gradually cooling labor market, is because, the Fed policy is modestly restrictive. So that should also help get that. I want to say, though, we're absolutely committed to returning inflation to 2%. If you look at longer-term surveys or market pricing, you will see that's a credible commitment, and there should be no question that that's where we're going.
Chris.
Great, thank you. Chris Rugaber at Associated Press. So there's a big investment boom in AI infrastructure right now, as you know, and wondering if the existence of such a boom would indicate that rates are not that restrictive after all, and could further rate cuts at this point perhaps fuel an excess level of investment there or market bubbles. How is the Fed thinking about that?
So I don't think that you're right. There are a lot of data centers being built and other investments being made around the country and around the world. Big U.S. companies are just investing a lot of resources in thinking about how AI, which will be based on those data centers, run through those data centers, is going to affect their businesses. So it's a big deal. I don't think that the spending that happens to build data centers all over the country is especially interest sensitive. It's based on longer run assessments that this is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things. I don't know how those investments will work out, but I don't think they're particularly interest sensitive compared to some of the other sectors.
And then just a quick follow-up. Could you mentioned that you do have data that you're looking at for inflation and growth in the absence of government data. Could you give us a sense? I think we know a lot about the jobs data that's out there. Can you give us a sense of what you're looking
big
at to track
recovery, big
inflation
recovery.
in the absence of
We'll see.
government data? Thank you.
Our markets
So
are
it's
still
a
in a
lot of
very
things, and it
strong.
doesn't
Markets are
replace
still in a very strong
government
uptrend on the
activity.
daily,
You know all
weekly
of
time
these.
frame.
It's-
What I'm observing is a
I'll just
huge
mention
spike in
some of the
interest rates. That's
main
exactly what we
price
were
stats,
expecting. We discussed it. I know
Adobe
someone
and
was looking at
others,
TLT. I said, be careful, as the yields were likely going to get a
for
fat
wage
pump. They
inflation,
have. So I
there's
think you
ADP
pick on
data,
small caps, guys. Mega cap tech
on
earnings are
spending,
approaching.
also
Everyone's going to
spending at
pile
some
into
point.
tech, which is going
Lots of
to
other
keep the
things to
S&P and
look at,
Qs
but
bloated.
it's-
I think
again,
the area to
it's,
pick on
it's
is small
many-
caps.
many different sources, and again, including what we get out of the beige book, which will be sort of come out mid-cycle as always. And it doesn't replace the government data, but it gives us a picture. Again, I think if something material were happening, if there were material developments, I think we would pick that up. I don't think we'll be able to have the very granular understanding of the economy while this data is not available.
Howard.
Howard Schneider with Reuters. Thank you. I just wanted you to elaborate a little bit on what you said a moment ago about the continued shutdown, making it more difficult to make a move in December, and that may make you more cautious. To the degree you are relying on private data that isn't the gold standard, or that you're relying on your own surveys or the beige book, do you worry at some point you're going to have to start making policy by anecdote?
This is a temporary state of affairs, and we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it. And that's our jobs. That's what we're going to do. If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not again, I'm not committing to that. I'm just saying it's certainly a possibility that you would say.
Driving in the
"We really
foggy,
can't
slow
see, so
down.
let's slow down."
As a follow-up in the debate on this
That's a
meeting,
little bit of a bearish.
we saw recently some pretty big layoff announcements coming from Amazon and others. Wondering if that figured into the discussion at all, that you're starting to see this tension between growth and employment starting to be resolved, to the detriment of employment. And secondly, some of the stress is starting to appear in the bottom spur of the K, as they call it, household health premiums that are going to possibly be going up quite substantially, things like that. Has that started to become a factor in your policy discussion?
So those are both things, that we're watching very, very, very carefully. To start with the layoffs, you're right. You see a significant number of companies either announcing that they are not going to be doing much hiring or actually doing layoffs. And much of the time they're talking about AI and what it can do. So we're watching that very carefully. And yes, it could absolutely have implications for job creation. We don't really see it in the initial claims data yet. Now, it's not a surprise that we don't. It takes some time for it to get in there, but we're watching that really carefully. But again, don't see it yet in the initial claims data. On the K-shaped economy thing, I would say the same thing or similar thing. We are. If you listen to the earnings calls or the reports of, big public consumer-facing companies, many of them are saying that there's a bifurcated economy there, and that consumers at the lower end are struggling and buying less and shifting to lower-cost products, but that at the top, people are spending at the higher income and wealth, and so much anecdotal data on that. And so we think there's something there.
Edward.
Thank you. Edward Lawrence with Fox Business. So, Mr. Chairman, I want to take another crack at the further reduction of rates is not a foregone conclusion. So in December, you said far from it. So if a cut might not be on the table for December because of lack of data, what does the other concerns then stem from? So if it's not lack of data as the reason December is not a foregone conclusion, what other things could be the concern then? Well,
the perspectives of people on the committee that, we've now moved 150 basis points, and that we're down into, you're into that range between 3 and 4 where many estimates of the neutral rate live in that 3 to 4% area. You're there now. You're above the median number for the committee, but I think there are people on the committee who have higher estimates of the neutral rate, and that's you can argue these positions since it can't be directly observed, the neutral rate. So, I think for some part of the committee, it's time to maybe take a step back and see whether there really are downside risks to the labor market, or see whether in fact the growth that the stronger growth that we're seeing is real. Ordinarily, the labor market is a better indicator of the momentum of the economy than the spending data. That's the lore. In this case, that gives a more downbeat read. So people just have, again, we've cut 50 more basis points in the last 2 meetings, and there was a sense like, from some, let's pause here, kind of thing, and a sense from others wanting to go ahead. But that's why I say differing views, strongly differing views.
So on that division, then you're talking about going forward. So what's more important?
Revisit
in
the
this
lows.
division? Is it
Let's
inflation
go.
risks? Is it
Chop it
employment
down.
risk? Or is there a deeper philosophy division among the board?
Look, everybody on the committee is deeply committed to doing the right thing.
If we lose this prior day low, guys, things are going to melt real quick for the rest of the day. We're going to have a lot of selling.
And as I mentioned, some of that is different forecasts, but a lot of it is also different risk aversions to the different
You can technically still long it off this PDL level, but if you lose this, it's going to be night-night.
People just have different risk tolerances, let's say. So that leads you to people with disparate views. You will know that from the speeches you've been listening to from my colleagues. And so we're at a place now where we have, in fact, cut 2 more times. And, we're 150 basis points closer to neutral, wherever that may be, than we were a year ago. And so there's a growing chorus now of feeling like maybe this is where we should at least wait a cycle, something like that. That's what it is. It's just what you think it would be. It's, and again, you've seen it in the September Summer of Economic Projections. You've seen this in the public remarks of FOMC participants. And now I'm telling you that's what you can expect that in the minutes. And I'm just telling you that's what happened in the meeting.
Elizabeth. Thank you so much. Elizabeth Schulze with ABC News. What is your explanation for why the job market is weakening right now? And what will this rate cut do to improve the job market?
So I think there are two things affecting the job market. And one of them is just a dramatic reduction in the supply of new workers. And that's two things. That's declining labor force participation, which is a cyclical
Test,
thing.
big test
And there's
here, big
declining
level.
immigration, which is just a big policy change that actually began in the last administration and has been accelerated now. So a big part of the whole story is that supply side story. Okay. In addition, labor demand has declined, and the unemployment rate has gone down, meaning that demand for workers has gone down a little more than supply. So that's what's going on, but it is mostly a supply function. It's mostly a function of the change in supply, I think, and many people think. So the question then is, what does the our tool do, which supports demand, and and I would just say, when you're in a situation where job creation, if you adjust for likely overcounting in the way that BLS does its work, is pretty close to zero. So maximum employment doesn't, on a sustainable basis, if you're creating zero jobs, if it's in equilibrium, if it's in balance, it's a pretty, as I said before, a pretty curious balance. So, I thought, and many of my colleagues thought, in fact, you've seen the last two meetings, that it was appropriate for us to react by supporting demand with our rates. And we've done that. We've reduced so that rates are looser. I wouldn't say that they're accommodative right now, but they're meaningfully less tight than they were. And that should help so that at least the labor market doesn't get worse. Though it's a complicated situation, and some people argue that this is supply and we really can't affect it much with our tools, but others argue, as I do, that there is an effect from demand and that we should use our tools to support the labor market when we see this happening.
You also talked about tariffs causing a one-time price increase. Should American household consumers expect that inflation will continue to go up this year because of those tariffs?
So the basic expectation is that there will be some additional increase in inflation because it takes a while for tariffs to work their way through the production chain and finally get to consumers. And we see this now from the tariffs.
We
that
still
we're
have
putting in
huge
place
earnings
now.
after
And
hours, guys. A lot of mega caps reporting.
If you put tariffs in effect, and they've been coming into effect consistently in February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring. These are not big increases, though. These are a tenth or so on inflation. They may be big increases on a particular product that's been tariffed, but overall, these are fairly modest. I think, some projections go, we're at 2.8% inflation. You might get 2 or 3 more tenths or 4 more tenths maybe. But then, as all of the tariffs are in, they stop generating inflation. You've had a one-time price increase. As long as you're not, at least this is the theory, this is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes a higher price level, but it stops going up, if you will. Prices stop going up. They'll just be at that level. And then measured inflation will come back down to non-tariff inflation. As I mentioned, non-tariff inflation is not so far from 2% now. Now, consumers are not interested in that story. Their prices are higher. More than that, the reason they're so unhappy about inflation is the inflation that we had in 2021, 2, and 3. Because, you can say that prices aren't going up as much, but that doesn't mean people aren't feeling those higher prices from the inflation we had 2 or 3 years ago. They are, and that's, I think, a large part of why the public, if you sample people, inflation is still very much making people quite unhappy. Even, and it's nice that, that prices are not going up as fast as they were, but they're still much higher than they were. And it'll take some time for that effect to wear off. As real incomes rise, it will feel better over time, but that's going to take time.
Michael Pickey from Bloomberg Television and Radio. Do you have any concerns that equity markets are or are close to being overvalued at this point?
We don't look at any one asset price and say, hey, that's wrong. It's not our job to do that. We look at the overall financial system, and we ask whether it's stable, whether it could withstand shocks, right? So, banks are well capitalized, while some households are clearly under stress. In the aggregate, households are in good shape financially, relatively manageable levels of debt. At the lower income spectrum, you are seeing rising defaults, particularly around subprime auto, but nonetheless, in the aggregate, pretty good. You don't see too much leverage in the banking system or the financial system. It's a mixed picture, but it's not an overly troubling picture. And again, I'm not. It's not appropriate. We don't set asset prices. Markets do that.
Well, you must be well aware that by lowering interest rates, you're contributing to additional asset price increases. And I wonder how you balance the idea that lowering rates would help the labor market with the reality that it seems more likely to be stimulating increased investment in AI, which is the rationale for thousands of job cuts that have been announced in the last few weeks.
Yeah, I don't think interest rates are an important part of the AI of the data center story. I think people think they're great economics in building these data centers, and they're making a lot of money building them, and they think they have very high present value and all that sort of thing. It's not really about about 25 basis points here or there. We use our tools to support the labor market and to create price stability. That's what we do. That's our two jobs, right? So we're here by lowering rates at the margin, that will support demand, and that will support more hiring, and that's why we do it. Now, no 25 basis point or even 50 basis point hike is going to be a dispositive thing, but ultimately, lower rates will support more demand, and that'll support hiring over time. And of course, we also have to be careful about this, which is what we've been doing, because we know where inflation is, and we know that, I've told you the story. It's a complicated story, but this is the best assessment that we can make. Because there's uncertainty around inflation and the path ahead for inflation, that's why we're going. That's why the pace we're going has been a careful one.
Victoria. Hi, Victoria Guida from Politico. On AI, I'm just wondering, it seems like a lot of the economic growth that we've been seeing is fed by investments in AI. So how worried are you about what a sudden contraction in tech investment would mean for the overall economy? Is there enough strength in other sectors? And specifically, are there any lessons that you take from the 1990s in how you might approach what's happening right now?
Yeah, this is different. In the sense that the companies that are so highly valued actually have earnings and stuff like that. So if you go back to the 90s and the dot-com, these were ideas rather than companies, and so there's a clear bubble there. Whereas I won't go into particular names, but they actually have earnings, and it looks like they have business models and profits and that kind of thing. So it's really a different thing. The investment we're getting in equipment and all those things that go into creating data centers and feeding the AI, it's clearly one of the big sources of growth in the economy. Consumer spending also, though, has been, is much bigger than that, and has been growing, and has defied a lot of, negative forecasts, continuing to do so this year. Consumers are still spending. Now, it may be mostly higher-end consumers, or maybe skewed that way. But the consumer is spending, and that's a big chunk of what's going on in the economy, substantially bigger than AI. You could point to growth. I mean, actually, maybe growth as opposed to level, but consumer spending is a much bigger part of the economy.
And why do you think that the labor market is slowing so much, even though consumer spending is strong?
Why has it slowed so much? Well, what's happened is that the supply of workers has dropped very, very sharply due to mainly immigration, but also lower labor force participation. So, and that means there's less need for new jobs because there isn't this flow into the pool of labor that, where people need jobs because there aren't those people now. So there's not a supply of workers showing up for jobs. In addition, demand has also gone down, and so has labor force participation has declined, which is more of a sign, in this case, of demand as well as trend. So I think you're seeing some softening. The economy's growing at a slower rate than it was, 2.4% last year. We think around 1.6% this year. It could have been a couple of tenths higher if not for the shutdown. And of course, that will reverse. But, you still got the economy growing at a moderate pace.
Andrew.
Hey there, Andrew Ackerman with the with the Washington Post. I wanted to ask if you could elaborate on how you think about policy in the context of the data drought. Does it make you inclined to stick with your plans as set out in September in the absence of the data that might change your mind, or does it make you inclined to proceed with added caution because of uncertainty?
Yeah, well, we'll know when we face that question, if we face that question. It'll probably be argued both ways, right? But I've said a couple times here that, if you really aren't getting information you really don't know, and the economy looks like it's solid and stable and hasn't really changed, there will be an argument. I don't know how persuasive it will be, but there will be an argument that, you slow down when you can't see as far ahead. Others may argue, I'm not sure where this argument will come, but you're perfectly right that you could also argue, well, things haven't really changed, but you might not know that, So I don't know whether we'll face this or not. I hope we don't. I hope by the time of the December meeting we're getting, a better flow of data. But if we're going to have to do our jobs one way or the other.
Okay. I also just wanted to ask a FinReg question. I think several years ago you said the overall amount of capital in the system was about right. As the Fed moves forward with a revised Basel proposal, potentially changes to the GSIB surcharge, has that changed at all? Or are you planning to significantly reduce the amount of capital in the system? Thanks.
So there are discussions going on, I think, among the agencies, and I don't want to get ahead of those discussions. I continue to think that the level of capital, when I said that in 2020, was about right. And of course, there's been much capital added since then through various mechanisms. But I look forward to I know those discussions are really just getting going. They haven't come to the point where they're got a whole plan and that kind of thing. So I really don't have much to say on that.
Brian.
Hi, Chairman Powell. Brian Chung with NBC News. Is the weakness in the jobs market accelerating, and who's at risk if the interest rate cuts are not the effective medicine for a further slowdown in the labor market?
So we do not see the weakness, as you put it, the weakness in the job market accelerating. I would say, then again, we didn't get the September employment report, payroll report, but we look at, the unemployment insurance claims, initial claims are reported at the state level, and we still get those, and we can accumulate them and get the national number. And there's really, no story. You can look at the numbers. Same thing with the job openings we get from Indeed. There's just no story over the last 4 weeks. It's kind of stable. So you don't see anything that says that the job market is, or really any part of the economy is making a significant deterioration. Don't see that. You see more things like I mentioned, though, which is you see big companies making announcements of either of layoffs or of the idea that they won't need to hire. Their number of employees is not expected to go up over a number of years. There may be different people working there. They say that too, but they don't need a bigger head count. So you see those kinds of things. You don't see it in the aggregate numbers. The layoff numbers have not gone up, but job creation is very low. and the job finding rate for people who are unemployed is very low. But the unemployment rate is very low as well. 4.3% is a low unemployment rate.
So as you make these cuts, is it the lower income workers that you're thinking about, or those who might have their jobs automated? Is there a particular
That we're
section
thinking
of the
of?
labor market that you're particularly?
So we can't, our tools don't allow us to target.
Here
any
we go.
demographic or any income level and that kind of thing.
Retesting that prior day low. Very
We saw
bearish
this
if we
during the
lose
global
it.
financial crisis and the long recovery. If you have a long period of very strong labor market conditions, it benefits people at the lower end the most. The last 2 or 3 years of that long expansion, people at the lower part of the income spectrum were getting the biggest benefits, and you know, lots of things were happening in that space demographically, which were very constructive. And you know, we're not at that place right now. But so, yeah, you know, I mean, a stronger labor market is the best thing we can do for the public. It's also part of our job. It is half of our job, but it is absolutely the best thing we can do for people. You know, along with keeping prices stable. Those two things. I mean, inflation also hurts people on fixed incomes more than other people.
Courtney. Hi, Chair Powell. Courtney Brown from Axios. As you know, the 12 Reserve Bank presidents' terms are up for renewal at the end of February. I'm wondering if you can give us a timeline for when the board will consider those reappointments and whether we can expect everyone to be re-upped or if we can expect some changes.
So it's a process that we go through under the law. The way the law works is we have a reappointment process every 5 years for all of the reserve, each of them and all of them. We're in the middle of that process, and we're going to complete it in a timely way. And that's really all I can say.
Okay, thank you.
Daniel.
Daniel Davis, Agence France Presse. You've now had dissents in 3 consecutive FOMC meetings, but in this meeting you had dissents going in both directions, and you've just mentioned there's strong disagreement over the future path of rate cuts. Have these disagreements complicated your role presiding over the FOMC meetings, and if so, how?
I wouldn't say that, no. I think you know, you have to take what comes, and what comes right now is, you know, pretty challenging situation where we have, first of all, we have 4.3% unemployment. We have an economy that's growing close to 2%. So, you know, overall, it's a good picture. It's a good picture. But in terms of our policy, we have upside risks to inflation, downside risks to employment, and this is a very difficult thing for a central bank because, you know, one of those calls for rates to be lower, one calls for rates to be higher. We can't do both, so we have to balance the two. And so it's a challenging thing, and, you know, as we have worked our way through this process, you would expect that there would be a range of views across the committee on what to do and the speed with which we should do it. And that's what we have. That makes a lot of sense to me. All of these people are, you know, people who take their jobs very seriously, work very hard at this, and just want to do what's right for the American people, but they have different views on what that is. And, you know, it's an honor to work among people who care that much. It is, but I don't feel that it's unfair or anything like that. It's a time when we're making quite difficult judgments in real time, and I believe we'll get through this, and I think we've done sort of the right thing so far this year. I think it was appropriate for us to be careful about this. I think it would not be appropriate to just ignore or assume away the inflation issue. At the same time, I think the risk of higher, more persistent inflation has declined significantly since April. And if we do wind up resuming rate cuts at some point, we will at some point. You know, I think we're trying to get to the end of this cycle with the labor market in a good place and with inflation, you know, on its way to 2% or at 2%. So that's all we're trying to do, and we're doing it under, you know, quite challenging circumstances and doing the best we can.
We'll go to Jennifer for the last question.
Thank you so much, Chair Powell. Jennifer Schonberger with Yahoo Finance. Both regional and large banks have taken losses on loans given delinquencies on subprime auto loans. JP Morgan CEO Jamie Dimon warned, when you see one cockroach, there may be more likely. I'm curious how the Fed is looking at these loan losses and if it poses risks to the financial system or the outlook for the economy. Is it a warning sign?
So, we're obviously, we watch these things very carefully, credit conditions very carefully. You're right. You've seen rising defaults in subprime credit for some time now, and now you've seen a number of subprime credit, automobile credit institutions having significant losses, and some of those losses are now showing up on the books of banks. We're looking at it carefully. We're paying close attention. I don't see at this point a broader credit issue. It doesn't seem to be something that has very broad application across financial institutions. But we're going to be monitoring this quite carefully and making sure that is the case.
And then separately, many, you yourself have said that we're in a bifurcated economy right now with high net worth individuals continuing to spend with the lower income pulling back. How much of consumer spending continuing hinges on the stock market remaining strong? In some odd way, does the market help keep the economy buoyant?
So there's some relationship there, but remember, the more wealth someone has, the lower an additional dollar of wealth matters. So your marginal propensity to consume declines quite dramatically as you reach levels of stock market wealth. So, the stock market, it would affect spending if the stock market went down, but it wouldn't drop sharply unless there were quite a sharp drop in the stock market. People at the lower end of income and wealth have a much higher marginal propensity to consume of an incremental dollar of income or wealth, but they don't have the stock market wealth. So I think it's certainly a factor supporting consumption right now. But you would see it if you saw a material correction in spending, but it wouldn't be. You shouldn't think that it'll dollar for dollar stop consumption, because that wouldn't be the case. Thanks very much.
That is it. That is the Powell press conference. So nice job. We crushed it on the put side, guys. Basically getting short right before that drop, netting over 120% on the zeros. Good job if you caught that with us here. We also sent out the member trade alert to get into the 278 puts. Those also ripped up over 100%. So great job yet again. A nice trading session on FOMC. I love FOMC days, guys. I was seeing some things. I thought we were going to get a pop earlier on. Decided that, the volatility wasn't there. Wasn't seeing the volume trends and spike to the upside like we usually see. So I decided to get in early right off that point of control where we saw it rejected quite a number of times intraday, and that paid dividends. So nice trades today if you caught that. Still in a couple other plays. I did send out a couple new alerts to members, some new options trades. So we'll see how those kind of pan out over the next couple days. They're very short dated. Believe it or not, guys, interest rates have absolutely just ripped higher. Ripped. So we will certainly see what happens over the coming days, whether or not this is just a one-off or not. But again, you look at those yields, and that's kind of what we were discussing earlier on the session, basically saying we got some insights from the Canadian market, right? And I always like to look at that. It's my market that I follow. I'm here in Canada. And you look at the 5-year yield on the Canadian market. It was green off of the Bank of Canada cut this morning. And we said you're likely also going to get a spike in U.S. yields. We don't have to make it complicated. Sometimes you just look at what other markets are doing, and that is called intermarket analysis. So again, nice job trading this morning and today. We still have a few positions that I think can be some lottos into the end of the week. Specifically this Bloom Energy, guys, I'm quite surprised as to how strong it is. I'm still riding a very small position in Bloom Energy, just 3 contracts, 120 puts. I still think those can pay quite well. But remember, we got mega cap tech earnings So basically, it's going to be very, very cool. Stoic asking, where do you get the alerts? Through the options group where you signed up as a TC, your basic TC membership, but I have options alerts and investor alerts, so you can take a look. But right now, the S&P 5, so look at the divergence between small caps. Small caps are definitely looking so, so weak. Specifically on the hourly chart, you've had a complete meltdown in your financials, KRE, IWM. So IWM, I think, is probably going to get a lot of sell side pressure. Granted, a couple reasons why yields are ripping, guys. That's the main reason why. And I think if tech earnings come in strong, which again, they're likely going to, you're still probably going to see people dump small caps and chase mega cap tech. Your Nvidias, your Apples, your Microsofts, your Googles, Metas, Amazons. So that is kind of what I'm leaning towards. Pick on the Russell. The Russell is full of dog shit companies. And yeah, that's just what I can tell you is pick on the Russell. Pick on the Russell. Go through the Russell holdings and pick on the Russells. All right, so we're still melting down here. Again, S&P 500 is still holding above its prior day low, so that is technically a little bit of a positive sign, but it needs to start getting its big butt up here, or else it runs the risk of selling off here into end of the day. I would not be surprised to see more selling in it, but you know, it's held above that PDL level quite well, but I would not be surprised to see more selling. Okay? And then I think if tech earnings come in well, again, they usually like to gap the market up on tech earnings, guys. Yep, pump and dump. Good stuff, Ram. That's the main thing. So very successful day for myself here in the trading room, and I could see the Russell revisiting the lows. It's looking very, very likely. What am I doing here? Oops, typing in the wrong thing. Quite a bit of volume starting to come back into the picture here. And again, obviously keep in mind there's mega cap tech, guys. We could see huge beats across the board, and then you get a nice face ripper. Who the heck knows, right? But so far, earnings across tech have been somewhat decent. So it wouldn't surprise me to see yet again more of a continuation move. But my money was made today. 200% SPY trades, over 100%. A nice almost 100% on Nvidia puts. And then that FI, guys, let's look at Pfizer here. Yeah, look at that. That got faded right back almost its entire move. That was a nice banger this morning too. Wow, that went high. Holy smoly. Look at that. Holy smokes. 14% bounce off the lows. That's crazy. But you look how bearish financials are looking, guys. These financials are just looking nasty. You know, the fact today that we're closing below this previous red bar low, that's a nasty breakdown. Looking like financials are a little bit choppy here. And regional banks too, guys, they could be going for their next selling. So just keep that in mind. Russell is full of these regionals. Full. Let's look at biotech real quick. Yeah, biotech, nice hard reversal from the highs. So this is where you may see, if tech earnings come in strong, you may see a very big divergence in the market where SPY Qs stay a little bit more firm, and then your Russell comes in. Look at this Russell melting. Chop it down, Russell. Nvidia, AMD, semis are still ridiculous. Crazy day. Look at our Russell, guys. Holy moly. That is beautiful. I like it. Yields are still spiking here, guys. Yields are crushing gold, gold negative. They're smacking Bitcoin and crypto. Your IWM is now down 1.28%. Holy moly, guys. Jeez, we just took those IWMs in the options group and they're almost trying to push up 100% on the swing trade side. That is filthy. That is crazy, guys. IWM going for new lows. That's what it looks like. Wow, they are dumping the Russell here, guys. Gap down tomorrow. Mega cap tech better save these markets, man. Mega cap tech better save these markets. Nvidia is still holding like a rock star. Look at this 2-year yield, guys. It can't stop, won't stop right now, up 3.21%. Holy moly. Talk about a ripper intraday. That's going to smack these small caps lower. Wreck it. Absolutely inverse movement going on. SPY now losing potentially that prior day low again. What pattern does this look like? It looks like a bit of a bear flag. If you want to throw some money away, you can buy IWM calls. Go for it. But I am short the Russell. That was just the recent option alert that I sent out to members, basically off this opening range low. You know, within 30, 40 minutes, we're almost up 100% on our 245 Russell puts for end of the week. New low of day for the IWM. Melting it, guys. Melting it. Boom. All right, guys, I trimmed half of my Russell contracts there. 226 trim. We just took that in the swing trading options group. Trimmed half of my IWM 245 puts. Beautiful. Just under 100% gain. Amazing. Now we can let the rest of these ride. 245 puts are going to be in the money here. Holy moly. We picked them up at $1.26. That was amazing. Nice 80% gain on those IWM 245s. What a dump there on the Russell, guys. What a dump. Another winner there. That's crazy. Nice volatility in the market today. Nice volatility. Financials getting slapped around. JP, I hope you kept your JP Morgan puts. Because after today, financials look like crap. I've been saying load up on calls and everything. Maybe you might be right. You know, tech is another beast, guys. Tech is another beast. You got huge earnings after bells. Huge, 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 huge companies. You know, almost what, half of the indices reporting. You got Microsoft, you got Meta. The big boys are on deck, guys. You got Googly Moogly, Starbucks. I mean, holy moly. Some big companies reporting. What's going to happen? I feel like they're probably going to pump Google up, give it a nice gap up, make it really robust. They'll probably pump up Meta. I feel like they're going to take Microsoft down. So I feel like Google, Meta, pump, and then they dump Microsoft. That's just my 2 cents. But again, I don't have a crystal ball. Always right. Gavin's always right. What else you got? You got Chipotle, you got Mercado Libre, ServiceNow, Carvana, TMDX. Oh my goodness gracious me, there's a whole host. There's a whole host. Oh my goodness. Coca-Cola. Give me some Coke. Wolfspeed, eBay, KLAC. Holy moly, guys. We got some crazy prints. To be honest, let me put these in the chat first. But to be honest, guys, the big quote, the standout thing, there was a lot that was said, kind of the usual mumbo jumbo, but I loved it, pal. Driving in the fog, you slow down. We can't see. Oh my God. Oh, I love Pal. He's such a good chair. He's so funny. He's so funny. Literally, he basically said the Fed can't see anything. And that's totally right. You know, it's any idea on Teladoc? You know, considering IWM and small caps are weak, I don't really like it. I think they're going to sell it, but you never know. I mean, there's a ton of volume down here. You know, you did have CNC in the healthcare complex gap up on its earnings. UNH was mixed today. That fell on its earnings getting crushed. So I don't know. I really don't like it because of the IWM. If the IWM was strong, I would say yeah, it's going to gap up. But again, I don't know. I think it's a little bit risky buying longs here. I really don't know, guys. I really don't know. You know, to me it looks like TDOC had a failed breakout. You know, I would be a buyer on TDOC down here around 715 again. Looks like that's where it's going to me. But all I can say is if it misses, it's going to have a freaking drop and a half, right? You saw FI, right? Huge company, much bigger than Teladoc. That got absolutely creamed, right? But we'll see. It could easily gap up. I feel like they're going to destroy everything other than your megas. Those will be the last hoorah stock standing. Look at our IWMs, guys, up over 100% on these 245 Russell puts. Boom, pay us, pay us. It's for rent on Verbo. Yeah, start it up, man, start it up. I'll rent on Verbo. I use Verbo I much prefer Airbnb's interface, but Vrbo's not bad. I get quite a bit of bookings from Vrbo. They really started to, actually, I think I make a little bit better margins on Vrbo than Airbnb. But Airbnb's user interface is so much better on the back end for a host. But Vrbo's not bad. Not bad at all. Alright guys, final 17 minutes. Look at how they flush the Russell, guys. You got a ton of earnings. No cleaning fee. Oh, that's a deal, man. That's a deal. Your cleaners are everything in the short-term rental business. That's pretty jokes. So guys, again, 245 puts did pay us quite nicely. Got some runners in the event they want to gap us down tomorrow. Gold is getting fully liquidated, guys. Gold is getting absolutely liquidated. That's intense selling. Very intense selling in the gold market. Sit down. Got some crazy moves. You'll stay on and cover earnings. All right. What do you want? What charts you want up? You want Googly Moogly and Meta? I'll give you the stream key. Nvidia seeing some selling here. That's the first ever Lego yacht. That sounds hey, Lego's expensive, guys. That's a baller yacht. It's made out of Lego, that's expensive. Those yields are just so strong. So strong. It's about to get spicy spy. Spicy spy. It's got a good ring to it. Yeah, it's had a nice move, guys. I'm pretty much done trading. We'll see what the earnings have for us. Oh. Oh. Imagine we had FOMC every day, this type of volatility. How crazy would that be? The options trading group, or there's investing group, which is common shares. The options trading is your higher frequency trading. All you need to do is for Trump to tweet more. Yep. Big push through in the market. All right, guys, so let's just look at Google. Google right now obviously is going to report a double beat. That's what the market is. The question is the earnings strong enough to justify this recent move? But Google's one of the strongest mag names in the market. Absolutely ripping face. Estimate is 99.94 billion. You cross that 100 billion revenue, guys, that'll be a milestone and a half for Google. So it's looking like it's probably going to try to do that. Would not surprise me at all. That would not surprise me to see Google make that money move. Meta right now, I think Meta's going to have a blockbuster move as well with their augmented reality smart glasses. I mean, that little fucking thing, I can't remember what it's called, that Mark Zuckerberg now has with their screen on their glasses. It's pretty sweet. I mean, it's a good step for augmented reality and smart glasses. Can't deny it. You know, Apple flopped on their smart glasses. A few people have flopped on theirs. So the fact that Meta's kind of leading the charge, pretty brilliant. Zuck. And then Zuck's kind of close with Trump, man. Trump likes Zuck here, so I think that's going to get a nice fat candle up. Microsoft, I don't know. I mean, you know, the weekly chart looks kind of still. Do I have Meta calls? No, I don't. I probably should put my money where my mouth is, but I don't know, man. Meta's scary. I remember witnessing that Meta drop on earnings, that one drop where Meta just, that gift of a buy opportunity where Meta was under $100. Oh, I think it went down to like mid 70s or something. Man, I remember watching that earnings. That was crazy. But I probably should pick up Meta calls. It's been through a nice amount of consolidation. You know, it would be a gift if Meta drops down. I would look for some calls. So you pray that it drops, but Meta's looking like it's probably going to pop. You know, I could see Meta easily back over $800. But we'll see what happens. We will see what happens. Who's first? Let me see who's first on deck, guys. Buy meta call is now full port. All right, will you reimburse me? Will you reimburse me if I lose? Do I have your guarantee? So Microsoft 405, Meta 405, Google 403, Starbucks 405, Melly 430, Chipotle 410, ServiceNow 410, Carvana 405, Coca-Cola 410. So really it's coming down to 403 is Google, so Google will be up first, guys. Google will set the tail of the tape. Googly. And then it will be Meta and Microsoft simultaneously. Simultaneously. You'll have the big boys. Wow, mixed beat loans. That's crazy. Do some push-ups and pull-ups and then full part it. Yeah, get the pump on. Get a pump going so the market can pump some more. Should, eh? When are you going to have your dog on the live stream? He's camera shy. That's the member private stream, guys. Get the dog on air. I know I probably get a lot of views. Huskies. Those Huskies are trending. Look at the bounce on the Russell, guys. Holy moly. AMD to 280 by the end of week. Easy 5% gain. I'll put my BTC in for those tips. Do it up. Do it up. Put that address in. It's crazy. Plug it in, guys. Plug it in. All right. Google, Meta, Microsoft, Chipotle. All will be on watch, guys. Big boys reporting. Big boys reporting after hours. Let's look at Mr. Softy here. Mr. Softy catching a little bit of that bid. All right, guys, I appreciate everyone tuning in. We will see you all again tomorrow. Stay tuned for earnings. I'd love to stream it, but got to make some post-market videos on some of these earnings, and I want to look at some of the meat and potatoes into some of these earnings reports, as it definitely shapes a lot of the market directions. So again, thank you all, guys. We will see you on the charts a little bit later. Take care, everybody.